Hello, people of the internet, and welcome to the Debt Review Awards 2023 Industry Pre-Show. Thank you so much for tuning in and joining us. It's lovely to have you with us today. Now today, even as we speak, our team are running around getting things ready for the in-person guests who are going to be arriving for the Debt Review Awards shortly. That happens a little bit later at about 2 o'clock, with speeches kicking in at 2:30. We hope you join us for that. But today, in the Industry Pre-Show, we're going to do a deep dive into various industry topics. And you may be wondering, well, what will we be covering? Well, check out the comments section because we will be updating you as we go along. But we can look forward to some industry interviews with leaders in our industry, from the NCR, from FNB, from Consumer Friend. We're going to have various presentations from service providers to our industry. So think the software people, the PDAs, and including an interesting one from the NCT. Keep an eye out for that. We also catch up on what's going on at CIF. Now, you may have heard that there's a lot of interesting discussions going on there, but you may not be aware of how far along they are and what's going on. We're going to get some updates about what's happening at CIF and just in general what's going on in the industry trends at the moment. We're also going to take an in-depth look at two interesting topics today: the legal side of debt review and the insurance side of debt review. And we'll catch up with a few industry experts who can break those things down for us and help explain them to us. So while you're here, you've joined us, thank you very much. Why don't you put your name down in the comments section, tell us what company you're from, tell us how many of you are watching together, and feel free to leave comments during this session. Right, so we hope you enjoy the show today. Thank you for joining us, you're most welcome. Let's get the ball rolling. Our very first topic of the day is a credit provider chat, and we're going to be talking about what do credit providers think of when they hear the term good debt counselor. So it's so nice to have Chantal from Consumer Friend with us, very well known in the industry. Chantal, we wanted to pick your brain a little bit. When credit providers think about debt counselors, of course, you have a particular viewpoint. You're seeing us debt counselors from your perspective. Tell us a little bit in your experience or in your mind, what is it that makes a good debt counselor? How does one figure out if you're dealing with a good debt counselor?
Well, firstly, we have to ask ourselves, what is debt counseling? And as defined in terms of the NCA, it's rendered a debt relief measure intended to assist over-indebted consumers struggling to pay their debt. And how does a debt counselor do this? Well, not only is the DC's duty to negotiate reduced payment plans, reduced interest, reduced payments with credit providers on the consumer's behalf, but it also involves guiding that consumer throughout the entire process by giving financial budget advice when needed, constantly keeping in touch with the consumer to see if they still understand where they are during the process and what is required of them to get them to that next step. I guess it all comes down to what this ultimately will mean for that consumer when they see that Form 19 clearance certificate and is finally declared debt-free. Now, there are many factors that describe a good debt counselor, but I'll just briefly touch on 4 main reasons that stand out for me. Number 1, right from the get-go, before that consumer signs that Form 16, a good DC will ensure that the consumer is given a comprehensive explanation of the process while explaining the benefits of the program, also thoroughly explaining the risks involved. I have to admit, from time to time, we do get confused consumers phoning in and asking us, but why is my account blocked? Why I'm not able to purchase on my accounts? So that proper communication with the consumer in a simple but yet effective way, it is essential. And this also will ensure that they know exactly what they are signing up for and that they are 100% committed to start that journey. Secondly, is that A good debt counselor must have a sound knowledge of the process, the NCA and its regulations, constantly keeping up to date with industry changes, having a good relationship with various credit providers, and proper negotiation skills. So the debt counselor will also keep the consumer informed on their latest balances, proposal feedback, and court progress, etc. As an initiative to assist debt counselors and their consumers, our DRX online platform is so beneficial and user-friendly. We encourage consumers to work along with their debt counselors by signing up and getting registered to our online DRX consumer portal. Not only will this allow debt review consumers access to their debt review documentation, but consumers will also be able to view payments, current balances, and have the luxury of being able to extract detailed statements for their own peace of mind. And lastly, I would say being passionate about this work. A debt counselor that's passionate and have genuine empathy for that financially distressed consumer will be motivated and have that burning desire to help that consumer to financial independence. I always say a good debt counselor can be likened to a good doctor. Even after that sick patient is cured, that good doctor will from time to time still check up on his patients to make sure that the treatment that was offered actually worked. It's the same with a good debt counselor. From time to time, check in with the consumer, even after rehabilitation. Make sure that the process worked for that consumer, that they've learned something from it, so as to not find themselves back in that same position again.
Thanks, Chantal. That's an interesting insight into how you see things. And of course, you're dealing with a lot of debt counselors on a continual basis. So we really do appreciate your input and some sound advice for all the debt counselors out there on how we can look at our services in a fresh way and being consumer-centric, of course. So it's a real privilege to have Mohammed with us from ABSA today. We know that you're a long-time expert in the field with a lot of experience in debt review, and we know you're very busy handling stuff at CIF. So maybe tell us a little bit more about yourself. Tell us a little bit about CIF, and then please tell us what's happening at the moment with the famous DCRS.
Hi, everybody. Thank you, Zach. So Zach's asked me to chat to everybody a little bit about DCRS. Strangely, he's also asked me to be entertaining. Not sure if the two go hand in hand, but we'll give it a shot. I'm Mohammed Lehe. I work at ABSA. I also represent ABSA at the Banking Association, and in turn also represent the Banking Association at, amongst others, some of the CIF subcommittees, including the very interesting DCRS subcommittee. So perhaps we could start with what is DCRS? Bunch of alphabets. I think most of us don't even know what it stands for, right? So it actually stands for Debt Counseling Rules System. And where did it come about from? So back in the, let's call it the bad old days, we had debt counselors that weren't adequately guided with, as we know, not the best piece of legislation in place being the NCA, and so inevitably we had a situation where credit providers were receiving quite erratic repayment proposals from debt counselors. These proposals often resulted in unjust or inequitable, rather, distribution of the consumer's funds. So the credit providers then got together in one cloudy afternoon at African Bank in around 2010, and they agreed after, I think, much debate. We'll use the word debate and be politically correct. After much debate, the credit providers agreed on something that we think was a little bit more fair than the random stuff we've seen in 2009 or preceding that. And so this was then incorporated in something called the task team agreement. Essentially, it's a set of rules that dictates how a consumer's debt repayment affordability is distributed among credit providers in as far as possible a just and equitable manner and form. It involves an extension of the repayment term, a reduction of the interest rate, and um, naturally a reduction of the installment as well. And then we fast forward to a few years back with the NCR eventually had a look at what the task team rules was. And apart from just the DCRS rules, there were a bunch of other very good operational guidelines in their task team rules. And NCR kind of liked it and they refreshed it after engaging industry. And eventually we ended up with the task team rules now being not promulgated, but rather been endorsed by the NCR as a guideline to the industry at large. So that's great. And what we have then in DCRS is a system or tool which I think in many cases is integrated into the debt counsel in vendor systems. And what it allows the debt counselor to do is to pop in an affordability amount after he's done the real hard work, right? After he's gone and looked at the consumer and had the tough conversations. He's then able just to pop in an affordability or a debt affordability amount. And the lovely system would then, as equitable as possible, calculate the repayments to all the credit providers. And so that's DCRS in a nutshell, and that's how it works. There's a lot also happening with DCRS, especially of late. So we had DCRS initially coded in, and I'm not a tech guy, so pardon me, but in a very old tech language, coding language rather. And a couple of years back, we said this is just not sustainable, and let's go fix this up and bite the bullet. And then a huge modernization project was initiated through BASA. That project is happily materialized into a brand spanking new DCRS. And all the while long through CIF, we've been working tirelessly, and we've created very useful debt counselor guidelines or system guidelines that are readily available. We've also got some available for credit providers, and all of these have been endorsed through CIF with input from the regulator as well. So a little bit about CIF. It's the Credit Industry Forum. It's a lovely forum which the NCR had initiated and allows us a platform to again solve for operational issues for again the not most meticulously drafted piece of legislation being the NCA. So then there's various forums at CIF or the Credit Industry Forums. There's various subcommittees that work on different bits and bobs of the broader credit systems. I'm involved in a few, but I also chair on behalf of BASA the DCRS subcommittee. So maybe I can share some work on, or maybe I can shed some light on what happens there or what's in the pipeline. Okay, so what happens at CIF? A lot happens at CIF, especially at the DCRS subcommittee. We've got debt counselors and debt counseling associations involved. We've got credit providers, not only banks, but all the credit providers, or well, not all, but many of the credit providers together with the associations. We've got the system vendors, we've got PDAs, we've got the regulator. So it's generally a very crowded meeting. Or at least it was pre-COVID, where we would go into the boardroom and the NCR would serve us biscuits and snacks. But right now we've got it. We run it virtually, and we eat our own biscuits and snacks, and we talk about a bunch of things. Many of those things were, however, placed on the back burner, if we could call it, subject to us modernizing the whole system, because I think the last thing you'd want to do, if anyone knows anything about tech releases, is to build a whole new system in or to build a whole new process within a new system that you're trying to land. So we've now landed the modern DCRS, and everything looks hunky-dory, but that's also left us with a little bit of a pipeline of stuff that we wanted to touch on but didn't get the opportunity to touch on. So some of those things that we will be looking at in the near future, and we're going to start working towards, is is what I'll take us through now. So there were a couple of bug fixes that in fact we've already landed since the adoption of the modernized DCRS. Then the other thing that we're looking at is long-term loans exceeding 60 months. So um, and this historically hasn't been a problem because unsecured loans were typically well within 5 years. But of late, with the added strain in the market, we've seen some lenders extend credit on more excessive repayment terms, and that doesn't leave us in a great position to have those accounts or agreements solved within DCRS. So lots of debate happening there. We, at the moment, we're gauging how broad the impact of these loans are. Again, we probably don't want to spend many millions to solve for 6 credit agreements, but if the problem subsists, we'll start looking a little bit harder and working a bit more tirelessly and try and solve for that. And then there were a couple of investigations that we were looking at around the affordability calculations, around some of the service fees not reflecting on mortgages. Those are already receiving attention and should be sorted soon enough. Then the other thing that we're looking at was a unique credit provider identifier. We've already landed that one, and that's been great. That helps, I think, many of the banks and other credit providers to identify proposals. Another one of the pipeline items is DCRS cascading. At the moment, the system doesn't support cascades, and it does result in perhaps a slightly lower solve rate because of that. But there are some constraints, and we are looking at those constraints, and hopefully we'll sort that out. Then I've got a little bit of a bugbear because there's 3 very important items that we really need to solve for, and I think all the parties, all the stakeholders at that forum is really eager to solve for these, but we're almost kind of in limbo because we unfortunately have to wait for feedback from our fellow committee on DCR on debt counseling fees. So as you know, the debt counseling fees is bundled into the DCRS system or into the debt repayments. And for us to adequate or to initiate building and solving for these issues, we need a defined set of rules. So as it stands, we know that CIF is looking at some of the debt counseling fees, and it probably wouldn't be wise for us to embark on creating solutions for something that may change in the very near future. So some of those things are issues that we've had with PDA stepped fees, issues where we've seen deferred legal fees and deferred debt counseling fees. There's a couple of proposals on the table for consideration there. And then also the ability, I'm sure the debt counselors would love this one, the ability for TCRS to cater for annual reviews. I can tell you the credit providers like that one. I'll move on now to a couple more items. One is pension-backed lending, and perhaps looking at additional rules to build into DCRS on PBL loans. And the other one is for CPs to DCRS, and DCRS almost a integration for COP service. And that's still perhaps in discussion or exploration phase, whether we could kind of automate some of the COPs that go between credit provider and debt counselor. So that's some of the items. There's a bunch more, and every time we meet, I think more items get placed into that pipeline. So we've got a big pipeline. We don't have a huge budget, and I think we don't have lots of time. So we're probably one of the most active subcommittees. We've managed to meet even while some of the other subcommittees had to focus on other things. We've continued meeting and continued engaging. So I think from a DCRS perspective, from industry perspective, I think there's a lot of buy-in and everyone likes it. Then perhaps to look forward, where are we going to with DCRS? For me, perhaps the most important thing is for us to increase the usage of DCRS. For debt counselors, if you've got a system that's going to make your life easy and assure you an acceptance from a credit provider, I wouldn't understand why you wouldn't use it. So I urge you, please log on, get a training manual, get one for all your staff if you've got any write out, let us know if there's issues, but start using the system. There may, as with anything in life, there may be things you won't like, and those things perhaps could be looked at. But I can guarantee it's going to make your life a lot more easier from if you're a debt counselor and you use the system. We know even the major courts have taken a liking to the system, and we see it when we go to court that the magistrates, once they see DCRS, kind of a lot more easy to work with. So going forward, we need to increase our usage on DCRS and hopefully get to a point where the bulk of our proposals solve within DCRS, and where they don't, we need to throw them into our already big pipeline and start solving it and working towards solution for those. I know by now I would have bored you contrary to my instructions from Zach, so I do apologize for that, but I also hope that I've shared some insights on DCRS and what it is, and I also hope that you're going to contact your debt counseling association or the banking association and ask us for guidelines, or even the NCR, and ask for guidelines and start using DCRS. Thank you for the time, and it's been lovely chatting to all of you. Enjoy the rest of your day, guys. Bye.
Well, we are very happy today to have with us Mr. Reinhard Pettenberger, who is not only the president of the CASA, but he's a long-time debt counselor and comes from Debt Therapy, one of the winners of the Debt Review Awards in years past. And currently we're hoping to speak to him a little bit about developments at the CIF. So Reini, maybe you can tell us a little bit about yourself and tell us a little bit about what CIF is and what are they busy doing?
Good afternoon, Zach. How are you doing? It's great to be back here once again. So yeah, just a little bit about me. My name's Reinhard Pettenberger. I've been a debt counselor since the inception. So I actually started my company before debt counseling originated back in 2005, and then naturally moved over in 2007. Since that time, I mean, I've been doing nothing but debt counseling. I was part of the CASA, and I left the CASA at one point as I felt things weren't going very well. And then as it grew, so back in 2010, I rejoined the CASA, and I've been with them ever since. And currently standing in as their president. So which basically means those that don't belong to the CASA, just to give you a bit of a background on the CASA. And the CASA are a group of debt counselors that sit together in one association, where we sort of sit there and fight for your rights as a debt counselor and negotiate with banks and the likes of the NCR, etc. So I mean, and to this end, obviously, I mean, we've seen this industry grow from its original times, because let's face it, the law wasn't quite clear. So the NCR sort of came up with an idea that we start something called the CIF, which stands for the Credit Industry Forum. So, and that's basically where all stakeholders get to say their part and how they're feeling. So, and I'm sure you've all know about the task team agreements. Now, this would not have been possible without CIF. So it's a lot of collaboration between all parties just to make things better. So that's what we do, and we try and meet as regularly as possible. I mean, unfortunately, with the NCR, they have had a few issues on the lines of staffing, etc. So we can't go through these things as fast as we want. But we currently have three sort of major topics we're sort of discussing at the stage. One is the DHS. I'm quite sure you're all excited. There are going to be some new changes, so we're all looking forward to that. And as far as I know, it's pretty much imminent before that's going to be sort of released. Then the next thing, I'm not sure if you all saw the circular. It was reckless lending. We got a circular out last year, which nobody actually agreed to. So we did actually dig our heels in and say, hold on, we haven't agreed to any of these sort of functions. So it's back at the drawing board and back at CIF level, but we are hoping to complete that soon. And then obviously there's the DHS. Not DHS, I do beg your pardon. It's the DCRS that we've been looking at, and the DCRS, as you know, it's all gone into the cloud now, and there's still a lot of things that need to be done. So there's a lot in the pipeline the issues within DCRS. Now, one of the biggest things that I can see at the moment would be the new loans that the banks are giving out. They're giving out super loans, as I call them. For example, Standard Bank will consolidate all the client's credit card, his personal loan, etc., even his car finance. In some instances, you see loans in excess a loan of 500,000-600,000 rand that they pay over a 10-year period. So obviously that doesn't fit into DCRS, especially if a client comes under debt review with us. So these are all the things that we need to look at and we need to work our way around. So, I mean, it's not an overnight solution, but trust me, we are working hard on it and we are looking at ways forward to ensure that we can sort of establish a nice free-flowing systems between both the debt counselors and the credit providers. All right. Now, I mean, I'm sure this is a topic that's on everyone's list, and that's debt mediation. All right. Yeah, I'm sure everyone's complaining there. I'm sure you also got little grumpy faces on as soon as I mentioned debt mediation. But you know, at the end of the day, this is where we are. So, and it's another thing that we've brought up at CIF level that we want to discuss in more detail. So that's part and parcel of the ADRs. So the ADRs and debt counseling should be in separate lanes, in my opinion. But obviously, debt mediation has sort of crept in. So we need to sort of establish what are the rules, what are the regulations, and how we can best tackle this. But and this will be taken up at CIF level. So hopefully, we'll be able to get somewhere on that. And if it's my choice, I'd get rid of debt mediation. But then again, we'll just need to see what happens. All right. So the next big topic, and that would be DC fees. All right. Now, if you recall, from my recollection, the last time we had any fee review was back in 2016. Now, this was also based on the research that the Cassio did back in 2012. So now we stand in 2023, and nothing has sort of moved forward. So, and we all know that all the increases throughout. I mean, just look at electricity, for example. All right, how that is shot up. That's when we actually have any. So, I mean, at the end of the day, I mean, there are two viewpoints. I mean, obviously, you've got your DCs wanting one thing, and then the NCR looking at it from another angle. But where it stands is the NCR want to make sure that the poor client gets value for money, whilst the DC also wants to actually make an income. So, and what has been discussed on various levels is maybe they should split the DC fees up. So instead of getting your full payment immediately, maybe have that split up over a 6-month period. Now, if you look at that from a DC perspective, it's just impractical. I mean, obviously, your larger DCs could possibly cope with it, but especially on smaller DCs, I mean, financially, it's impossible for them. Because I mean, they need to rely on a steady income that's coming through, so they can pay for their advertising and basic work that needs to be done. So, yeah, there are a lot of discussions around this. I don't know the full solution behind it, but it is something that we want to discuss at more in-depth level at CIF. So, for me, I mean, where the fees stand at the moment is the 8,000, the 9,000. And then the 450 recurring as being the max. I mean, is that fine or is it not fine? And then obviously the reckless lending fee of 1,500 rand, which also sort of comes in. But then again, you have to look at the perspective of a client who's only paying you 3,000 rand a month for the debt review. Now, if you're going to take 1,500 for reckless lending, I mean, one's got to work with integrity, and this is what the NCR are also looking at. So. We are going to have these discussions. I mean, certainly, hopefully before the end of this year. But then again, maybe it'll be next year where I'll be there. But any sort of viewpoints on fees and how you'd like to see something, by all means, send something through to Decasa, through to Vanessa. It's decasa@decasa.co.za. Send your viewpoints. We'll certainly have a look at them because these are things that we'd like to bring up at our next meeting. So yeah, by all means, do send your. I mean, I implore you to actually send that information to us so we can actually look at it and try help everyone at the same time. Okay, so let's have a look at what else is happening within the industry. Now, a few things that the Casa has picked up. I mean, we've had conversations with the Credit Bureau Association. Now, that's all very exciting. Now, the Credit Bureau Association wants to become part of the CIF meetings, but unfortunately, we just don't have space to put them in right now. So it has been decided that we'll still work with the credit bureau associations together with the credit providers to see how we can streamline this process. The idea behind this is to try get rid of the fake paid up letters that are being received, etc., etc. So, and once this gets implemented, it will be absolutely great, and it should make our lives a lot easier, especially when issuing clearance certificates. But I mean, it's still they're still working away at it. But as soon as we have any more information, I'll certainly update you and let you know exactly what's happening on that. But by all means, I mean, if you've already been contacted by the Credit Bureau Association, just work with them. It's and tell them what your fears are, etc., so we can actually sort of build something that works for everybody in the industry. Right. Then on another point with credit providers, I mean, I've had various conversations just due to the complaints that I received at the Casa, and those have been number one was with Capitec, and then the other one was with Woolworths because Woolworths aren't accepting any proposals over 60 months because obviously that runs through Consumer Friends. So I thought maybe I'll just sort of speak to Woolworths directly. So I'll just sort of fill you in on those, but. Let's just have a look at Capitec to start with. Now, right, I've been to the Capitec's debt review departments, but this time I've decided I actually I'll go speak to the head of these sort of institutions. I landed up in Stellenbosch, and I had the pleasure of speaking to Ian Orpen, and we actually went through the processes, their fears, etc. I mean, we've all seen the adverts, and the adverts aren't really. They didn't, right, obviously the adverts had a negative effect on the industry as we saw it, but from their viewpoint, I mean, they've got a lot of people that go into debt review and they'll end up with the rogue debt counsellors. So all of a sudden, person's under debt review, they take all the money and this poor client doesn't get serviced. And this is one of their biggest fears, and this is something that they really wanted to push through. Then another sort of aside was that they said, why is it suddenly a debt counsellor? I've been receiving a certain amount of money from a client on a month-to-month basis, and then the following month it's halved, and it carries on like that, and then we terminate. And I said this is a result of the so-called rogue debt counsellors, as I call them out there, calling up the client and promising to do the same thing at a fraction of the price, and therefore they lose out. So this is something Capitec were very very sort of keen to sort of help us with. And I said, listen, we need to get there, and what can we do to stop these people sort of transferring across and believing it? So we've sort of come up with an agreement that I'm going to put something together. They want to put something together on their websites, etc., just to warn people of the problems if you're transferring to another debt counsellor, what to look for, etc. So, I mean, all in all, I do believe it was a very fruitful meeting with Ian. I will be going. I know there are other issues. We've had terminations that have happened, which shouldn't have happened. There have been the odd glitches in the system, which they've assured me that will be sorted out. But I will certainly be sort of speaking to Carolina and Cindy in the next coming weeks, just to sit down and just iron through those little problems that we do have. So I'm sure Capitec will be straight back up there where we've always wanted them, and now we should have their support in warning clients of these rogue debt counsellors. So all in all, that's quite good. So let's move on to Woolworths. Now, as you know, Woolworths are very strict on what they will accept in terms needs to be cleared within 60 months. If you're lucky, maybe 62 months. So I've already had one meeting with one of the Woolworths heads, and I've just had another confirmation now that the head of Woolworths is very willing to speak to me, and we will be having a conversation in a few weeks' time just to see what can be done, as this will help the industry immensely. So yeah, we are doing what we can, but it would be nice to see if we can get that resolved. And obviously, with Capitec being resolved, I think everyone's going to be very happy with it. So yeah, so that's pretty much it in a nutshell. That's happening at the moment. I mean, there are loads of other things, but I'll keep you here all evening, and we'd never get to the awards. So I think it's best that I wrap up now. And Zach, thank you for your fantastic awards that you've done. I think it's your 10th year now. So yeah, it's 10 years. That's a milestone. So congratulations.
Yeah, Ronnie, 10 years flies by, and it's lovely to see the progress that's been made when debt counselors and credit providers work together. I think that's one of the things that, as the association, Cassio has been really at the forefront of trying to organize is cooperation within the industry and trying to make progress. Sometimes otherwise we just end up at loggerheads. So I must really say it's nice to see these meetings happening. And thank you very much for the updates, not only about the industry, but also about CIF, where we know that everybody's trying to look for solutions with different interests at heart, but all trying to see what we can do for the consumer at the end of the day. Appreciate that very much. Oh, it's so nice to have Denise Hartley with us. Every opportunity we get to speak to you, we want to really pick your brain. We know that you've been in the industry for a long time, and we're super excited to hear a little bit of insight from your side about how credit providers measure themselves, because many of us don't know.
Thanks, Zach. It's always lovely to have an opportunity to chat to a broader audience. For those of you who don't know me, my name is Denise Hartley. I'm the Chief Operations Officer for Retail Collections at FNB. And what that means is I look after the first Rand debt review portfolio. So Zach asked me to run through, what do banks, credit providers measure themselves on? And it's a very interesting question. While I think there may be some nuances with regards to different credit providers, I think basically it always comes down to the same thing. So there's one, which is, what do I get measured on as the person who is responsible to Exco for the debt review portfolio across, our different products and our different brands? The question is, what does that look like? What does good look like? So what they measure me on, in a nutshell, is cash collected, right? We're running a business. The second thing that they look at is clients rehabilitated. How fast are you getting the clients in and getting them out and getting them back on their feet again? If that is the purpose of this process, unless you're doing that well, you are failing the process. And then the last thing that they have a look at, obviously, is cost. Cost is a big driver within any organization. And of course, we know that the debt review process, specifically right up front, is very labor intensive. So it's very manual, and it's the same for debt counselors, right? It's where you spend the most time, the most of your resources. And so, the question is, how do you do it better, faster, and less expensive? So with less manual intervention, with less people. So those are really the three big ticket items that I have to report to. Then what we do from a department perspective is I then have a look and see, what does good look like for me within my department? And so those metrics are slightly different, because what I'm looking at is I'm looking at inflows and outflows. I'm looking at turnaround times. And the reason for that, obviously, is because specifically, when you're a bank, there is a lot of legislation and regulatory requirements and that kind of stuff. So we get audited a lot. And the thing is that you always need to be compliant. So you need to be compliant to not only the National Credit Act, but the information regulator, FIXA, ombudsman, NCR, we get audited by a whole bunch of people all the time. So the question is, how well are we doing what we're supposed to be doing? So inflows, outflows, turnaround times. The other thing we look at, that I have a look at, is acceptance rates. And the reason for that, obviously, is because that directly goes into the underlying costs. Once again, I said, the sooner you get the matter finalized, the less backwards and forwards you have, the better it is for, the rest of the process. And the less you have some backwards and forwards. So those are really the three main things that we look at, or that I have a look at, to see whether or not I think my department is doing well.
Okay, and then do you have another measurable? What's the next thing? Or is there a next thing or not?
Those are really kind of the big ticket items.
Okay.
With regards to what we look at, specifically when you have a very big team, and we've got 3 different teams, so we've got various campuses in that, because you've got the West Bank team, and we've got the DA team, and we've got the FNB team, and they sit in different parts of the country and different offices, and trying to, from a staff perspective, ensure that everybody's happy and healthy and committed. Because the big problem with having uncommitted staff, if they're not buying into your values, they will just tick the box. And box ticking, just showing up, doing the minimum, not applying yourself, is where you start getting as a business into trouble. So I think one of the big things that we've always sort of, and you guys know, like, I'm that person, if you give people meaning, if they understand that every day I come to work, I'm making a significant difference in somebody else's life. I'm not just issuing a COB. I am helping a debt counselor help a client to understand what the client's financial, prospects sort of look like, and what their situation really is. I'm not just assessing a proposal. So it's that kind of stuff that sort of helps, I think, give meaning to our staff. And when you get that right, then they do that well. And then, when you have little shifts and changes and that kind of stuff, as we always do in corporate, then there's always a little bit of a settling down time. So it's always difficult. It's like, we've just made the call recently to start going back to the office more. So people who have now set up their home offices and have been all very comfortable for the last 3 years now have to get transport money out of somewhere. We've moved buildings, so it's not even in the same place. So it's like possibly an extra expense. What do you do now with your kids? So whenever you have that kind of sort of thing happening, you have to think as a manager, how would I react in that situation, number one, and how do I make it easier for my team to settle down and be comfortable again, and then once again focus on the big things, which is how do I help people who need help.
It's really good insights, and what you're doing, everybody's got to be doing, right? Because everybody's got to answer the NCI, everybody's got to answer to the information regulator, everybody's got to answer to their clients at the end of the day, because like we all know, we're kind of servicing the clients while we're trying to do our own thing. So it is a tricky measure. And of course, you've got the debt counselors that you have to deal with every day, who either screaming on the telephone or crying on the telephone or are happy on the telephone. So it's a real mixed bag. Oh, every time you tell us stuff, we learn stuff. And I think it's nice to get an insight into how you and other credit providers are doing things. And it just helps us to understand that we've got to constantly be measuring ourselves, constantly looking for ways to improve. And I can see that you of course are doing that. And as a department, you're doing that. Thank you.
Good day. My name is Heidi Seller, and I will be taking you on a journey into the day-to-day operations within the Old Mutual Finance Debt Review Department. As winners of the large non-banking division 5 years running, our department strives to produce excellent service, accurate information, and transparent relationships with all our customers and debt counselors. So stay tuned to see how the magic happens. As our dream team arrives into this amazing, vibrant workspace, they are ready to work and play hard.
Good morning! Have to start my day with coffee.
We start with our applications team. This department is the first step within the debt review stage. They make sure all necessary documentation are received and sent to the debt counselor for the client's assessments to be done. Proposals. Our proposal team handles all negotiations in order to provide our clients with the best possible offer. Court applications are there to ensure all court applications and court orders are restructured accordingly by providing debt counselors with all necessary documents. Our correspondence team assists with all general queries, from balances to settlements, payments, and even refunds. And last and certainly not least, our terminations department are responsible for handling any withdrawal notices or reinstatement requests received from debt counselors. Yet, all work and no play is not a thing in our debt review department. A timeout from our desks is encouraged to keep the spirit and morale at an all-time high. Our boardroom meetings are filled with critical thinking and are where our processes and strategies are put into a melting pot. We strive to find the optimum level of efficiency for our staff in order to provide the debt counselor and clients with prompt and knowledgeable feedback. We endeavor to work smarter, not harder. Let's hear some personal insight from within our department.
I am Maxine Wingrove, the 5 consecutive annual awards for the large non-banking service credit provider, the team leader of the department. If I could describe my team in one word, it's family. We debate, we push each other, but when it comes to getting things done, that's exactly what we do.
How does the business perceive the debt review department? Well, that we're constantly looking to support our customers and industry partners and delivering exceptional service to the industry.
The different personalities, we always agree to disagree, but our common goal is to take our department to another level.
Well, it's time to call it a day in the Old Mutual Finance Debt Review Department. We worked hard, played hard, and made a difference in many lives by simply doing what we love. Teamwork makes the dream work.
Well, it's so nice to have Eddie Krief with us here today. Eddie, thank you very much for joining us here on the pre-awards show. Tell us a little bit about yourself. Who's Eddie?
Good afternoon, Zach. Thank you very much for having a chat with me. Yes, who's Eddie? Eddie is currently the Chief Sales Officer of DCCP. I've been in this industry, in the insurance industry, for 24 years. In multiple areas: short-term insurance, life insurance, dabbled a bit in the medical insurance space as well, and currently find myself in the credit life insurance industry. Yep, I play golf, I scuba, I do a bit of hunting. Yep, that's a bit of my hobbies. Yep, and I've been with the company for almost the last 4 or 5 years now.
All right, now the company you're mentioning there is DC Credit Protect, also known to most of us as DCCP. Tell us a little bit about DCCP.
Zach, yes, so DCCP started in 2019, specifically looking at breaking into the debt review industry. We specifically chose the debt review industry due to the NCR regulations that changed in 2017 that gave us specific guidelines One of those being that we are not allowed to charge more than R4.50 per thousand. And unfortunately, in the past, the credit life wasn't regulated, and you could charge anything really. And we've picked up credit providers that were charging up to 30 Rand per thousand. So really, we wanted to come into the market, help the consumer, save them money for a client who is already in financial turmoil, and also assist the debt counselors, to generate an additional income. We at DCCP understand how much work the debt counselors put in to get the clients through the door, and then onboarding for us makes it so much easier because they're doing the hard work, and we also look after our DCs and remunerate them properly. So saying that, we started in the credit life industry, but we've got various other products that we offer to the market now. There's a bit of a funeral product, there's an income protector, there's a life conversion product, and we're also busy now starting with our short-term insurance department, so that we can start looking at people's cars and household, etc. We're based in Pretoria, and we have a staff complement of about 30 people at the moment, handling from sales to admin to claims. So that's in short what DCCP does.
Yeah, and it's nice to see that you're expanding. But now tell us a little bit, Eddie. People, when they, for instance, buy a car, they need insurance. We know these things. Or maybe we know, hey, I should get insurance. What about people who have insurance? How does one's insurance needs change over time? I mean, what kind of situations would make you look at your insurance?
Well, Zach, yeah, as life goes on and your life changes, there's various things that can happen. And let's look at debt review clients, for instance. Their financial situation is changing. For whatever reason, it could be something like a COVID where income reduced, and now all of a sudden you're sitting in a situation where you may not be able to afford all of that insurance. So that will bring in a change. So a lot of people will then start looking at the life portion of the insurance and say, well, do I need this right now? And they might opt to cancel it. Looking at short-term insurance, what can I do? Can I take lesser insurance? So from a comprehensive to maybe third-party fire and theft on your vehicle, should that vehicle be paid off? That is possible. If that vehicle is still under finance, you are obliged and by law, by your agreement, that you must have comprehensive insurance. But then it's very important to go and have a look to see, is my vehicle insured for the correct amount? Am I not over-insured? When last did you update your vehicle? Because every year, your value of your vehicle depreciates. So it's very important, from my point of view, every 6 months, every year, have a look at that type of insurance to see if you cannot save some money. That's very much looking at debt review. To the general public, you're buying a new phone. That phone needs to be insured. The phone that you insured 2 years ago was 15,000 Rand. It's now going to cost you 20,000 Rand. Vehicles prices are going up. The value of your contents of your house, for instance. You bought a TV 5 years ago and it was a 10,000 Rand TV. To replace that TV today is going to be 15,000 Rand. So you continuously have to look at the values of your insurance, whether that be life insurance, credit life insurance, short-term insurance. So it's an ever-changing thing, and you need to review your policies regularly to make sure that you keep up with the markets, and to avoid under-insurance. And as I mentioned now, if you're not going to increase your content for that 15,000 Rand TV, and it's still insured for 10,000, you're now underinsured and will get paid out less on that TV. So it's ever changing, and you have to stay up to date with it.
Tell us a little bit about this catchword credit life or credit life insurance. What is credit life? Maybe just break it down for us a little bit. Tell us, because we do hear a lot about it in the industry, and maybe if a consumer is talking to a debt counselor, those words will come up. What does it mean?
So let's start with the definition of credit life insurance, and that explains it the best. So credit life insurance is insurance that a consumer takes out in the event of death, permanent disability, temporary disability, inability to earn an income or otherwise called retrenchment, and dread diseases. Now, this insurance is purchased by the consumer to protect the credit provider. Okay, so the credit provider has given you a loan, and that money needs to be protected. So in a situation where you talk about death or permanent disability, this policy, for instance, would settle the outstanding balance should there be a death or a disability. And the banks are happy and they've got their money, and the client's family is looked after, they don't owe any money. So that's from a once-off payment point of view. From a monthly point of view, you're looking at retrenchment, temporary disability, and dread diseases. That pays a monthly fee to the credit providers to make sure that your installment is covered. Right. So in short, it covers the finance agreement that the consumer took out with the credit providers.
Yeah, so it gives the credit providers a lot of peace of mind, and also takes away any obligation in case of those things for the consumer. Eddie, typically, like those month-to-month things, how long do those kind of benefits normally last?
Well, Zach, it depends from provider to provider. So, now the NCR has a set of regulations, which is the minimum regulations, but then insurance companies or service providers can also decide to give additional benefits. NCR regulations specifically, retrenchment must be 12 months or until the consumer has found employment again. Temporary disability, again, 12 months, or until the consumer is in a position again to work. So say, for instance, I normally use the example of a doctor. Say, for instance, that doctor was in an accident and injured his hands. He can't operate. He now goes for operations and rehab on his hands. 8 months down the line, he can start operating again. So that policy will then only pay for 8 months. Right. Dread diseases is not an NCR regulation, but it is one of the products that is in our policy and most of the policies in South Africa. And that product pays for 3 months. Okay. So dread diseases, if we look at cancer, we start on the 3 months and then we assess the situation. You know, is the client, is it operable and can be removed and the client can continue after 3 months? Or is it more aggressive and the client needs to go for chemo, and then it might turn into a temporary disability claim, or worst case scenario, also death. So that's why it's only 3 months. So it's assessed on that basis.
Right. So what I'm hearing is that not all products are exactly the same. They're similar, but there are obviously advantages to some over the other. Many consumers, they don't even know that they have this product. They kind of signed a few forms and there was a lot of talking. Do you find that common when you talk to people about the subject?
Yes, very much so. Yes, very much so. You know, and it's a very much still a process for us as financial services provider in the credit life industry is education. You know, I think there's a lady called Maya Money that did us a huge favor because she went viral during COVID and explained to a lot of people what it is about. But there is still a huge gap in the market where people actually don't know that they've got it, and they don't know what it's for. I know which hopefully after the 2017 regulations, you know, the consumers out there are being more educated and understand what it's about, so that, you know, when you get retrenched, there is you can claim. You know, if you pass away, there is a claim. You know, and a lot of people don't know that. But that's our jobs as financial services provider in the credit life industry, is to educate the clients and the consumers.
And one thing we'd just like to mention to our viewers is that you have the option of supplying your own service provider when it comes to putting this type of insurance together with your credit. Is that correct, Eddie?
100%, Zach. And the Financial Sector Conduct Authority's laws are very clear that any consumer has the choice of where he wants to insure himself. So talk about cars. You can be with OUTsurance today, and you can be with Santam tomorrow. You have that choice. And the same with credit life. So there are the credit providers have got their financial services providers within their entities where you can have insurance. But there's also companies like ourselves, which are outside of that. And also, you could also have a normal life policy with the likes of a Santam or a Sanlam or a Discovery or Old Mutual. If your policy has got the minimum requirements, so death, disability, and retrenchment, you could actually cede that policy to the bank as well. So yes, you have that choice, and you don't have to go for credit life. As I said, a normal life, disability, retrenchment policy with a Sanlam or an Old Mutual can also be ceded.
But we are talking a little bit about debt reviews. So perhaps when people come into the debt review space and the debt counselor sees that there are these needs, or maybe the needs are already met, there's also the option to make a change. So even if you have a policy, as you mentioned, you could now change it. So why do people sometimes do that with credit life insurance in the debt review process? Why has that become quite popular in the industry?
Yes, like I think the NCR regulations, and I keep on referring to them, of 2017 really opened up the door. And that R4.50 maximum that you're now allowed to charge is sort of where the credit providers' threshold is. They're sitting at R4.50. We have picked up that some of the banks have reduced their rates, but coming from an insurance background, it is possible for us to lower the rates. Now, your credit life insurance rate is calculated at R1 per 1,000. Now, maximum you're allowed to charge is R4.50. We can bring that rate down considerably, and in many cases save these clients thousands and thousands of rands. We did a bit of an exercise recently where we said, okay, let's have a look at somebody that we're saving R100 a month, all right? And let's take the average of 5 years for debt review. Yep. That's a 60-month period that you're under debt review and you're saving R100 every month. In our calculations that we did, is we saw that we could possibly shorten the debt review period with 2 months on R100 savings. Now, I'm not giving any information away or saying ID numbers or anything, but I can tell you that we have seen clients where we save them in excess of R1,500 a month, which is huge. And the unfortunate thing that has happened here is that the 2017 regulations addressed future finance agreements, but didn't address them retroactively. So we are still picking up clients that are paying 15 or 20 Rand per 1,000. And that's why it's important for the debt counselors to take the credit life as part of the debt review process and save that client money. We can definitely make a huge change in that consumer's life, and just loosen up a little bit of money to pay into debt and get that client debt free a little bit quicker, and you can get back into the economy and make a change.
Yeah. Eddie, is it a complicated claims process? Let's say something happens to me and I do become unemployed or temporarily experience some sort of disability that's keeping me from earning. Is it difficult to claim?
Zach, yes and no. So depends on where you're sitting. So let's look at claiming from a credit provider. All right. So client A has got a FNB account, a Standard Bank account, an ABSA account, a net bank account, right? So that client now needs to go and claim from each of those credit providers insurance. Okay? ABSA asks for a set of documents with their claim process. FNB would have a different process. Standard Bank would have a different process. So each of the credit providers, insurers behind them, different rules, different processes. So yes, that can be arduous. That can be difficult for a consumer, especially if they don't know the claims process. And they now have to go and do it with all the various credit providers. From our point of view, when we consolidate and we take over the credit life insurance, we will substitute all of the bank's policies and issue you one policy, right? With one claims process, one single set of documents to complete, and one contact point. And I think that makes it a little bit more easier to claim from somebody like DC Credit Protect versus having to claim from all the different credit providers.
Yeah, because normally you're a bit stressed at that particular time too, and you've got time constraints and energy constraints and all sorts of things going on. So I can see the advantages there. Right, but not everybody can just tell you what insurance you should have. There's a thing called phase. Tell us a little bit about that. What is that? Can I just walk down the street telling people, you must get this policy, you must get that policy? Or how does that work?
No, Zach. So no, not everybody can do it. You must be qualified and regulated and registered with the FSCA, the Financial Sector Conduct Authority. And phase falls within their regulatory framework. So phase is the Financial Advisory and Intermediary Services Act. So that basically governs financial advice. So from a sales point of view, if you want to sell insurance, you need to go through a process. You need to get qualifications. You need to go and write the extremely horrible regulatory exams. And then you become a qualified rep, go onto a license. Then you can give advice. In order for you to do intermediary services, and intermediary services is really when it comes to your admin. So administrative work, adding an account, deleting an account, cancelling a policy, those are classified as intermediary services. And the same set of rules apply to people that work in that in the intermediary services section, is that you also need to be qualified. There's a set of rules that the FSCA gives you to say there must be product-specific training done so that you understand the product. A class of business training is whether you're going into life insurance, short-term insurance, investments, RE exams as a rep, RE5, if you want to become a key individual, that's your regulatory exam number 1. And if you become a key individual, you are then in a position to then qualify and apply for a license to become an FSP. But yes, it's an industry that's very much regulated. And the Phase Act is one of them. There's the Long-Term Insurance Act, there's the Short-Term Insurance Act. So yes, the insurance industry is highly regulated.
Okay, so I won't walk down the road just telling people what to do, but I might see a need. So let's say I'm a debt counselor. I'm thinking, well, this is maybe something that I should be letting my clients know about. I should kind of encourage them to think about insurance, their situation, their credit life, whether they have the right cover to get them to speaking to the right person. Well, what advice would you give to a debt counselor?
Well, Zach, this is exactly why we positioned DCCP in this industry. Now, to be able to become a FSP is a long, arduous process, and the debt counselor needs to focus on debt review. Yep, and that's your specialized area as a debt counselor, and focus on that. So DCCP has placed them in the market where we will do that advice on your behalf. We will contact with your client. We will give the advice, and we will make sure that all the regulatory requirements and compliance from the FSCA is met in the correct way. so that the DC can focus on their expertise. So we've really made it very easy for the debt counselors to work with us. It's sending us a referral or a lead, and we will handle the sale and the compliance and the financial advice on behalf of the debt counselor.
Okay, so that's good for me to keep in mind when I'm doing my budgets. Sure, I might be setting money aside for the insurance, but I'm not telling the person. I'm referring them to someone who knows what to do. Okay, who knows the best product for them. But now, if I'm a consumer and I'm hearing about this stuff maybe for the first time, or maybe I have heard about it a little bit, but I've been hesitant, what advice would you give them?
Well, yes. Again, consumers out there, if they are not under debt review, they can also contact with a DC Credit Protect. We don't just work with clients under debt review, and they can request a quotation from us. They can go to the banks, go to the credit providers, insurers, and start asking questions and say, but how much am I paying, and why am I paying so much? Can I not get a better rate? But yeah, that's part of what DCCP is also trying to do in the market, is not just debt review. Let's look at all the other avenues, and there's loan companies out there, that gives you a loan, and there should be credit life on it. So if you're going to take out a loan or a credit card or whatever sort of finance agreement where there should be credit life, you can contact with us, and let's give you a quotation and say, you don't have to go with that insurer. There is alternatives, and educating the clients out there, because there was never education regarding the credit life, and that's just, it's going to take a long time, but we are seeing a change in the market, of clients understanding credit life a little bit more, and is more aware of the fact that I have got credit life.
Yeah, I also have seen an increase in claims, which is a good sign, because there were years when people never claimed anything regardless of the situation, and they had been spending a lot of money towards a product that they then never made use of. So that was quite sad. Eddie, you sound like you know what you're talking about. You sound like you've done all those regulatory exams about all those things. How do people get hold of you if they want to talk about the subject?
Yeah, thanks, Zach. Doing this for 24 years, you get to know a little bit here and there. Zach, so they can contact us telephonically. Our office hours are 8 to 5, Monday to Friday. Telephone number where you can contact us is 012-881-0296. You can also go to our website, www.dccp.co.za, or you could email me directly. Quite easy, eddie@dccp.co.za. And whether it's a debt counselor that wants to have a chat with us, whether it's a consumer directly, everybody's welcome. We're not going to force you into taking a policy or getting a quotation from us. If you just want a little bit more information, we're more than happy to help you with that. Educate the clients, is part of what we do and what we aim for.
Eddie, thank you so much. I really appreciate it. Most debt counselors are familiar with the NCR's monitoring process. You might be a little less familiar with the inspection process when the NCR comes to visit in response to maybe some complaints or want to investigate something. And it might be unclear as to what you can and can't do, what's allowed and what's not allowed. So we thought we'd ask the NCR for some advice. And we have Louise Page with us today from the NCR. Louise, so nice to have you with us. Please, you said you have 10 tips that you'd like to share with the debt counselors out there, so that they can best be prepared for such a visit. Please tell us a little bit about yourself, and let's hear these 10 tips.
Thank you, Zach. Okay, I'm Louise Page. I am the legal advisor in the debt counseling department at the NCR, and we're going to talk a little bit about on-site investigations. So 10 things to be reminded of when these investigations take place. So first and foremost, it's essential to understand that appointed inspectors are not required to make appointments or provide prior notification before conducting an investigation. This omission serves a crucial purpose in maintaining the integrity of the investigations, especially when there's a concern about potential tampering of information or evidence. Number two is requesting Section 25 certificates. Debt counsellors have the authority to request Section 25 certificates from the NCR staff when they arrive. These certificates contain essential information that helps establish the authenticity of the inspector and the investigation alike, such as the inspector's full name, partial ID numbers, details of the individual under investigation, a certificate number, as well as the NCR logo. So perhaps it would serve a good purpose to explain that there is an entire internal process at the NCR that is first complied with before any investigation takes place. Once a complaint has been initiated, either in terms of Section 1361 or 1362 of the National Credit Act, the NCR will direct an inspector in terms of Section 1391C of the Act to investigate the complaint as quickly as possible. The Chief Executive Officer of the NCR will issue the appointed inspector with a certificate in terms of Section 125 of the Act, which certificate serves to confirm the appointment of the inspector to conduct the investigation. So number three is the verification of the NCR staff. Debt counsellors can inquire from the inspectors about their full names and official titles at the NCR. They may be asked to produce an identity document to confirm the identity of the inspector as it appears on the Section 25 certificate. If there remains any further doubts or concerns, the DC can contact the HR department of the NCR to verify the employment of the personnel involved. It is important to know that copying or photographing of the inspector's identification is strictly prohibited, as well as the Section 25 certificate. So number four is access for inspectors. It is an obligation in terms of the Act for individuals to grant inspectors access to facilitate their investigative responsibilities. This includes conducting interviews where inspectors read the individual being investigated. Their rights as per Section 1394 of the Act provide reasons for the investigation and then request samples of relevant documentation. Furthermore, apart from being a contravention of the debt counsellor's conditions of registration, it is an offence in terms of the Act to hinder the administration of the Act, which includes any investigation by the NCR's appointed inspectors. Thus, the hindrance of any investigation is the hindrance of the Act and constitutes an offence. Number five is system access. Inspectors also have the right to request access to relevant systems. In cases where a warrant is presented, they have the authority to execute premises searches and seize evidence, but only if they have a warrant. Number six is the right to remain silent. Individuals being interviewed have the right to refrain from answering questions that may incriminate themselves. They can inform inspectors that they choose not to answer any specific questions. Number seven is the investigation timeline. There is no predetermined time frame for investigation. The duration depends on the volume of inquiries or how long it takes to obtain necessary documentation and to work through to come to a determination. Number eight is documentation during investigations. When copies of consumer files are requested, the debt counsellor must provide all relevant documentation, including communications, forms, payment records, proposals, emails, court applications, and court orders, etc. Assessment of these documents are done following the investigation, but it's not done on site. Number nine, very important though, is cooperation. Full cooperation during the investigative process is crucial as it is a condition of registration. Number 10, a very important one, is confidentiality of inspectors. It is strictly forbidden to disclose the identities of NCR inspectors to external individuals or entities within the area, as it would compromise ongoing investigations. Additionally, no inspector may be detained under any circumstance.
Thank you, Louise. Those are 10 really good tips. Some of them familiar and seem very obvious. Others, really good advice that we might not have thought of. So thank you for sharing them, and thank you for giving us your time. We are very familiar with monitoring visits, and these types of inspection visits slightly different. So those were 10 great tips. Thank you very much for joining us.
Hey man. What's up, man? What's wrong? Oh, I'm having the longest day, well, basically the longest lifetime, man. I've been to try and file these applications, nothing is working, you know, postponements, inquiries, nothing is working at all, man. I don't know what to do at this point. Consumers are calling me left and right. I don't know what to do, man.
You tell me you had to drive to get consent orders.
Bro, that's my life.
You had to print to get consent orders.
Dude, why do you think I'm here late every day?
I think you might be comfortable under the shade of the rock you're living under, but you know the National Consumer Tribunal.
National Consumer Tribunal?
Yes, an adjudicative body that grants consent orders for our clients.
What?
Yes.
No, man, tell me you're joking.
No, seriously, they are accessible, they are cost efficient.
Okay.
You can call them if you're confused. Cherry on top, they're working on an app, so you can do it during load shedding, you can do it anytime you want.
Whoa, I've really been living on that rock.
Honestly.
I might as well just become Fred Fitzgerald at this point.
And they're not even the world's best kept secret, I'm telling you.
Yo, man, you have to put me on, man. Tell me, what do I need?
Not a lot. They have limited requirements, man. And get this, they host trainings just about every week.
Is it?
Yeah, so I don't have to train you, you know?
Okay.
Yeah.
No, man, I really need to jump on this, eh?
Exactly.
Wait, man, so what is that noise?
Oh, actually, I just got some granted orders.
Yeah. You're a cocky person, aren't you?
Exactly. So now I'm gonna hit to lunch, okay? So you just go on www.nct.org.za.
Okay.
And yeah.
Okay, now I'll check it out, man. Thanks a lot, yeah?
Yeah, I'll see you, man. I'll check you.
Peace, though.
Oh, and by the way, I just got like 80 granted orders in my file a few weeks ago.
What?
Yeah.
Takes me like 3 months to get that number, bro.
Yeah.
Man, I've really been living under a rock, innit?
But just look, I sent you that YouTube link, so just look at it.
Okay, no, thanks a lot, man. Let me jump in on it. Okay.
Good day. My name is Eva Joy Ndlovu, and I'm the Assistant Case Manager at the National Consumer Tribunal at the Registrar's Office. Today, I'll be taking you through 4 reasons why you should file your consented debt review applications with the National Consumer Tribunal. One of the reasons why you need to file with the tribunal is that we're easily accessible. Applications can be filed online through our CMS system from anywhere in the world at any time. Visit us on www.thenct.org.za to log on to our CMS e-filing system. The NCT has national jurisdiction, therefore we have the jurisdiction to hear matters that arise from anywhere within the Republic. There is no limit to the number of applications that can be filed with us. Applications can be filed anytime according to the capabilities and the internet access of the debt counselor involved. We also hold online secular trainings on Wednesdays, and we hold ICT trainings on how to use our e-filing system every Friday upon request. Reason number 2 why you should file your applications with the NCT is that we offer expeditious service. The tribunal adjudicates on matters within an average of 30 business days from the date of filing. The first 15 days, the tribunal opens the pleadings to allow for respondents in the matter who would like to change their mind about the consented debt review application to file opposition papers. Should this be done, then the tribunal will issue a refusal of the application. However, should we not receive any opposition within the first 15 days, then you could get your application adjudicated within a matter of 30 days from the date of which it was filed. In the last year, the tribunal has adjudicated over 28,000 consent orders, with the ability to do so much more if we do receive more applications from other debt counsellors. We therefore encourage debt counsellors to be in touch with us and file with us. The other reason why you should consider filing with the tribunal is that we offer cost-effective services. Our filing fee is currently at 577 Rand and 81 cents. So far, it is the cheapest of all the other forums that offer the same services. The other reason why you should file with the tribunal is that we have a high granted order rate. Currently, our granted order rate stands at 99%. However, with the 1% refusal orders that we get, should the mistake be a tribunal error or a system error, the tribunal does offer a fee waiver service where the debt counsellor is allowed to refile the application at no cost at all. To get in touch with us, please visit our website on www.thenct.org.za, or you could email us on our email address at registry@thenct.org.za. Alternatively, you can give us a call on 010-590-5200.
It's lovely to have Timmy van der Grip with us today. Timmy, it's a pleasure to have you with us and telling us some of the things that you've experienced over the years in regard to the legal side of debt review. You've seen it all, and with your expertise, we thought we'd ask you a little bit about, well, how things were back in the day, how things have improved and changed over time, and of course, what the role players now need to keep in mind in regard to various legal aspects. So, Tim, tell us a little bit about yourself. For those who maybe don't know you, there are 1 or 2 people who maybe don't know you. Who are you? Where are you from?
Zach, it's always a pleasure dealing with you, coming on these type of things. And it's always an honor and a privilege. Thank you. I'm Timmy van der Grijp. I'm an attorney by profession, classically trained, admitted 23 years, did an MBA recently, got certifications from University of Cape Town on risk management and University of Cambridge on sustainability. Currently staying in Amsterdam in the Netherlands and doing some work here in credit. and are still very, very active in South Africa, active with credit providers, work a lot with the micro lenders and the counselors. So always a pleasure and always busy.
Yeah, and I'm sorry we can't have you on site today here in Gauteng while we are doing the awards, but it's fantastic to have you online. Tim, how important would you say actually getting your court order is?
Zach, I think that is the whole purpose of it. The problem with getting an agreement with somebody is that it remains a loose agreement until such time as somebody forgets about it. And there's a purpose that a court order, in terms of the Prescription Act, is there for 30 years. It's to make sure that nobody forgets about it. And that's the whole purpose of it. And when you restructure your debt, you're saying as a consumer to the credit provider, listen, I'm going through some hard times due to 1, 2, 3, and then the circumstances surrounding it for the purpose of this discussion is not important. But is that I need a break. There's something happened in my life, and we need to restructure outside of what I originally agreed with you. Now, it's as a consumer, you're saying, you know what, I'm sticking with my word. I'm just bending it a little bit. And to make sure that where everybody agrees to it, it is important that the matter be recorded, in something more than something that would be remembered for the next few months. And that's what makes a court order so important, is that everybody can refer back to say that, this is what we've agreed at the time. And this is how I will retain my home. This is how I will retain my vehicle, for an example. And it is really the most important aspect of debt review. And that's why in the second month you pay legal fees, to ensure that your attorney has, enough fees and are properly compensated for getting your matter to court and recording your agreement for the long term. And, you need to insist as a consumer that your agreement be recorded as a court order. You need to keep that court order, keep it with you, and make sure that you know what the terms are with regards to it. And make sure that you always keep with it. A court order is only as good as the keeping of the agreement, and I think that is important. So as a consumer, make sure that you push your court order and make sure that you always have it.
So take us back in time, Tim. Tell us about back in the day when we initially started debt review, and there was maybe a little confusion over who was going to do what and how things would be done.
I was practicing at the time. I was a practicing attorney, and I'm a classical litigation attorney. In court every day, motion court, trial court. And at the time, there was great excitement about the National Credit Act, and there's going to be a motion procedure, and we're going to be, representing debt counsellors and consumers and this and that, and until we got to court. And I can tell you for nothing, the magistrates were not excited as we were about it, having additional work. I think specifically with the act being poorly drafted, and it's not my words, the Supreme Court of Appeals stated that quite a few times. And it was an absolute disaster. I remember we were representing SA Home Loans at the time, which was a very big client of us, not for debt review, but as a foreclosure client at the firm where I was working. And we were tasked to put something together for them to comply with the act. And that's how I first got pulled into debt review, and it was a disaster. Courts refused to hear applications. There was a full moratorium at some stage where the courts refused. They said, well, you can put it on the roll. We're not hearing matters. Have a nice day. And it was really painful. I think billing clients for doing work or doing no work, and clients paying for you billing for not doing any work, it was painful. But I think that raised the issues with the powers that might be at the time. with the regulator very specifically, and I think that that's where the declaratory order came into being. Judge Duplessis, really applied his mind, and I think when you look at the respondents, it was really put forward that the most senior guys in the country, were there, made a case for BASA and the regulator and so on. And at least then we got something that we could work with. It was not perfect. I think, in hindsight, the argument should have been completely different, but we got what we needed at the time. Specifically some highlights with the debt counsel being the applicant, the consumer being the first respondent, and so on. That made things a bit easier. In hindsight, it was not the way to go. But at least the courts then knew, we're going to be using the magistrate's court. It's an application procedure. It's affidavits filed, this side and that side. These are the respondents and so on. And the orders that could and could not be made. So, I think that then brought things together and in conjunction with the task team at the time. And it was really something that changed the landscape, to get everyone together and literally on the same page as to how we're going to be doing this, and doing that without anybody holding a stick, coming together voluntarily, as associations with the regulator and saying, what, this is the way we're going to do things, irrespective of, what anybody says. I think that is the biggest achievement, irrespective of the content. I think that was the biggest achievement that can be asked for in any industry in the world. If sustainability could only be like that, we would have a better planet for our children, but irrespective. And, even today, it is really something that holds water. When you write to someone, you say, I'm holding you to your signature. That's the way to go. And it's amazing, the power that still have 13 or 14 years on. So task team agreement, and I think later on in the last segment of this discussion, we're going to touch on that again, which still provides, guidance as to where we need to go. So, that was 2010, and then we start going back to court. That's when I exited, practice. Wanted another challenge. You can only appear in the constitutional court so many times. And moved into a legal manager at a large debt review firm, start dealing with these matters very specifically. The application that was going around at the time where, I had one bond proposal that was over 1,500 months. Now, I can't offhand recall how long that is, but I think the consumer was 55 at the time, and his body would have rotten 4 times before he paid off his bond, which was weird. And then we really started looking into, those type of things. And it was always strangely, the Norris and the Jones judgment that came out at the time, where it says that proposals that did not even cover the interest was unlawful, and could not form part of that. And that started changing things. And strangely enough, I'm actually dealing this week with a matter where the bond originally under debt was 400,000, and it's now over 2 million because the interest was not covered. So those type of judgments, even though they were queried in other judgments at the time, those were groundbreaking. It really started putting pressure on the system, putting pressure on debt counsellors to expand their knowledge and expand the investigation into the consumer's income, expenses, and so on. And a lot of judgments since then was very important. There were plenty, I know, but from a regulatory point of view, and me being at the regulator for such a long time, the judgment that really stood out was Samson and Mars. I was the lead attorney. It was one of my matters, actually. So, I really had an input in that. So that was a very important judgment and changed the landscape at the time. Colette, very important. Botha versus Kokomoer. All big councils should know these out of their heads. And then I think in recent times, Van Vieren versus Roots changed the landscape completely. With the High Court, attorneys started looking at the High Court to assist with the magistrates' courts being so busy. And the judges seeing more and more of these. I think that changed the landscape. I was again very actively involved with BASA, with civil society, with attorneys, and so on, debt counsellors. And it's not really the judgment that we wanted, but you know what? It really set a bar as to what should be done, where should we go. And what cannot be done, I think, what was the most important thing. And it really started closing off and ring fencing, when consumers are under debt review, when they can get out and why they can get out, which is still a problem, I think, in the industry. A lot of consumers are saying, yeah, but I was never told, and that might be true in many instances. And coupled with that, and strangely enough, that the NCR versus Lamare judgment at that time, massive judgment, was 56 pages, if I can recall, as to what debt counsellors can and cannot do, what agents or call center agents can do and not do. And the judgment that was delivered at the time that, if a debt counsellor cannot prove that a consumer applied for debt review, they must be removed. That's groundbreaking. With regards to consumer rights under the National Credit Act, which was never there in the first place. So, those type of, the coincidence of these type of matters, is very strange. It was never planned that way. It's just strange that it worked out that way. So, two birds with one stone, and I think it's very important, that we at the time in 2021 put that into new withdrawal guidelines, because it was time for a review. I can't remember what the previous one were, but I think it was 2017 or whatever that was. So it was important that a review be done at the time and include those two judgments. So in a nutshell, there's a big difference, 2008-9 to where we are today, and I think everyone has grown, and I think it's because everyone took hands and said, you know what, it falls upon us to solve these issues, and I think without a stick and in most instances without a carrot too, everybody came together, and I think if it's not for everybody in the industry today, and my hat's off to you, we wouldn't be in the industry where we are today, and we would all be worse off with regards to it.
Taking us down that the little historical journey through some of those key cases, because often knowing where you're going is better than having no plan at all. So it's kind of nice to have clarity, although you may not agree with absolutely everything. It did absolutely put us all on the same page, like you said. And once you've got that, we're able to move forward. And at the moment, we're seeing the benefit for those who stick with the process and those who've been helped by responsible debt counselors and responsible credit providers. And it's lovely to see all the success that Debt Review is doing now. Well, Reinhard, we are so happy to have you with us today. Thank you very much. You're an attorney who's been in this industry for some time. You have a lot of experience. You're a very busy man. And you're dealing with these matters all the time. So please tell us a little bit about yourself, and then tell us, what does it take to be a really good attorney who represents the debt counselors and the consumers? What is it that makes a good attorney in those terms?
Isaac, thanks. First and foremost, thank you for having me. I really appreciate it, and glad to be of assistance and to have this conversation with you. Yes, my name is Reinoud de Lange. I'm from De Lange Attorneys Incorporated, situated in the heart of Cape Town. I've been in the industry since 2011, and luckily I started in the industry just after things settled out and the courts knew what a debt counseling application is. since I started in a legal department, and while I was busy studying, and then after I studied, I had to go and do a lovely 2 years of articles, which obviously I further obtained experience in courts. And soon thereafter, I started my own law firm, and I tried to do other type of legal work, but found myself back into the debt review industry, as it is a challenging industry, and I don't like to be a jack of all trades. You do what you're best at. So, Zach, let's start with, what does it take to be a good attorney for a debt counselor? This is actually a very interesting question, but as you know, if you put 5 lawyers in a room, you're going to get 7 different opinions. It's just the reality. Firstly, I would like to start with, the attorneys always need to be honest, straightforward with the debt counselors when taking instructions to bring an application to court. I've experienced many weird things in court, had my laugh, had my worries, but it is unfortunately how it goes in the industry, different attorneys. So firstly, the way I see it, the way I do it is, when a file lands on your desk that needs to go out to court after it's drafted, is go through that file. Take your time. People tend to forget that it's just not a file number. It's someone's life in that file, someone's home loan, someone's vehicle, it's someone's livelihood. Go to that file and see what the content of that file is. If you see anything funny, first of all, your courts. You know what every court expects, what they require, what's acceptable, what's not acceptable. If you go through that file and you see anything out of the ordinary, you need to discuss that with the debt counselor. Take your phone the debt counselor, and inform them that, for instance, if you open a budget and there's 3,000 Rand for ballerina classes, you need to communicate that to the debt counselor. Tell them that the court will pick this up and they will question it, and it will most probably not be acceptable. Secondly is, after you peruse the file, look at all the supporting documents. If you get a file and you need to go and issue it, and you see the payslip is 2 years old, or the proof of address is 2 years old, discuss that with the DC. The chances of that consumer no longer living in that jurisdiction is quite high, and you'll be going to court for no reason at all. Also, if you take all payslips, most probably that person's got a new job, and a review has to be done on that file to see the additional income. And then the quality of documents. Unfortunately, in our country, not everyone has access to proper scanners and printers, etc. And most consumers do take pictures of our ID, but that photo was taken with a Nokia 3310, unfortunately. And the court cannot make out who the person is on the ID. Also, if you see the consumer is married and outside of community property, ask for the ANC contract, or if divorce, ask for the divorce order. The court is going to require those things, and if you do not do that, you're just going to put yourself under pressure as soon as the court date is coming up, and rushing to get those documents, and then most probably is going to lead to a postponement. So the supporting documents, and ensure that the documents match on what is recorded in the application. If I attach a payslip with 30,000 Rand, but of net income, and my Form 16 states 10,000 Rand, there's going to be problems. The courts are looking at all these things. So that is also very important. Then what's very important as well is DCs need to be honest with their attorneys as well. If I get a proposal in my file and I see that this FNB credit card has been restructured for 300 months, you need to inform the DC. Listen, this account has not been structured properly. Most probably going to get opposition to it, and I haven't met any attorney acting on behalf of a DC that won that argument to repay a credit card over 300 months. So ensure that the proposals are reasonable and to avoid any opposition that will definitely come across. So we need to take a second to discuss counter proposals as well, where a matter is opposed and a counter proposal is provided by a credit provider, and the counter proposal is reasonable. Now, from what I've heard and what I've experienced is there are instances where a counter proposal are not being properly communicated to the consumer, where a debt counsellor is too afraid to call that consumer back and say, sir, we need an extra $200 to meet a counter proposal. You will benefit from a lower interest rate. The account will be settled sooner, and it will only be to your benefit. Now, the case law has been set out, numerous case law, and if we have a look at the opposing affidavits from attorneys acting on behalf of credit providers, it's basically a copy-paste situation where they cite the same case law, and you cannot deviate from that. The magistrate courts are bound by those case law. And very important, DCs need to explain to the consumers the consequences of not meeting a counter proposal. It's a fact. Banks go through all the bank statements. If they see takeaways 5 times a week or any type of entertainment, DSTV of 1,200 Rand a month, the courts will pick up and they will argue that. So, and there's no but in situations like that. It's not in the best interest of the consumer not meeting that counter proposal. So counter proposals, very important. Do not be afraid to phone your client as a DC, discuss the counter proposal, confirm the consequences and the benefits of meeting that counter proposal. So from a consumer's, also what's very important from a consumer side is confirmatory affidavits. We all know it's a fact. You cannot proceed with a debt review application without a confirmatory affidavit. You need that confirmatory affidavit to get an order if everything is in order. Now, if a confirmatory affidavit is not present, and it is what it is, attorneys go and issue applications without confirmatory affidavit to have that matter set down within a reasonable time for the protection of a consumer in the event that there's a counter proposal, for credit providers not to terminate the debt review process. So attorneys, and I've experienced it, attorneys postpone matters 3, 4, 5 times just because they wait for confirmatory affidavits. This isn't in the best interest of anyone. You need to have a harsh discussion with the consumer or DC if you've got the mandate to discuss it with the consumer directly to get that confirmatory affidavit back. If you do want postponement, and that is just my personal, I do it personally in my firm, one postponement. If by the second postponement you don't have the confirmatory affidavit, it's clear that that consumer is not cooperating with the instructions. Ensure that there's communication to the consumer, what is required, and if they fail to provide that confirmatory affidavit, withdraw the matter. You're clocking up the court roll for postponements. You are annoying the courts, and it's not in the best interest of any party, especially credit providers as well. From a credit provider side, should the matter be opposed. So confirmatory affidavit is a very important point. At the end of the day, attorneys can only work with what's in front of them. We're not miracle workers. We cannot go and argue a matter if there's no confirmatory affidavit, if the proposals are not reasonable, or if the documents do not match what's stated in the founding affidavit. We can only work with what's in front of us.
Thank you, Rand. I think you've pointed out some very crucial aspects of being a really good attorney appearing on behalf of the consumer and the debt counselor. So thank you very much. If people want to get hold of you, just remind us of your website address.
The website is www.dl-law.co.za, and I've got an email, info@dl-law.co.za. Happy to help with any advice or any guidance. It's my passion. I enjoy what I do. Some days better than others, but we're in it for the long run.
Thank you, Reinhard. We really appreciate your advice and taking time. So we're very excited today to have Wessel Symington from Steyn Cassio Attorneys with us. So well known in the industry. Wessel, you've been around for a long time, and we're very happy that we could talk to you a little bit about what it is that really helps identify a good debt counselor and a good attorney who works for debt counselors. Maybe we can go over to you. Wessel, tell us, who are you? Where are you from? How do we get hold of you?
Hi, everyone. I'm Wessel Symington from Steyn Cassio Attorneys. So yes, we've been doing debt review from the inception of the National Credit Act, from those difficult years up until now, where it's going a lot smoother. We've dealt with literally thousands and thousands of matter. So by now we know the ins and outs of the industry. And so yeah, the question is what makes a good debt counselor? So I think the first thing we must look is, what does the Act say? What does the courts say what a debt counselor is? So in terms of the Act and legal precedent, a debt counselor performs a statutory function in terms of the National Credit Act. So a statutory function means basically it's a function that's prescribed in the Act. So the very first thing that makes a good debt counselor is actually knowing what the Act says. So in terms of Section 86, how do you determine whether a consumer is over-indebted or not, and taking the relevant information and requirements of the Act into consideration when making that determination. And then secondly, obviously, once you've made that determination, is to follow the Act and to follow the regulations, which sets out the process for debt counseling. So as a starting point, to be a debt counselor, you must know the Act from the beginning to the end. And there's various judgments that have confirmed that a debt counselor is considered to know the Act. So you can't use it as an excuse when you get into trouble to say, no, but I did not know a specific section of the Act. So that's very important. And then secondly, you have to be independent. So a debt counselor is independent, and even though you always feel sorry for the consumer that comes knocking on your door, you must always remember that you must be independent, and you must balance the interest of the consumer and the credit provider. So just as an example, we have case law, the Supreme Court of Appeal judgment of McLaughlin, that confirmed that interest rate must be covered on a restructuring proposal. So your proposal, at least the interest rate, the interest on that account must be covered. So if you are providing a proposal which is less than the interest on that account, that is an irrational proposal, and then you are not acting in the best interest of all the parties, and you are not being independent. So yeah, I think that as a starting point is very important. But then obviously we can't just, debt counselors are not just robots, and the employees are not just robots and follow the Act. There's other principles that I think it's important. So the first thereof is the employee skill development. So with that, I mean that everyone in your organization and all your employees must know and understand debt review. They must know and understand that the effect they have on your consumers. As a simple example, if you don't capture an acceptance letter, the order that's going to be granted is not going to be at a reduced interest rate. And that has a big and a huge impact on your consumer. So first of all, employee skill development. Secondly, communication. So in Afrikaans, we have a saying, communiceer of moeilikheid. So with that I mean is, if you don't communicate, you're going to get into trouble. And I've learned that when you have bad news, or when there's a situation that that's difficult to explain to consumers, it's always better to rather you phone the consumer and explain the situation than the consumer having to phone you and then hear what the issue is. So communicate with your consumers. Then attention to detail and adaptability. With that I mean, the debt review process is set by the Act. We all know how the process goes from A to Z, but you must always make provision for and to identify matters that don't follow the normal process. And then when you've identified it, act and deal with those problems. And with that goes hand in hand is problem solving and going the extra mile. So once you've identified a problem, are you just merely sending an email? For example, you don't receive a COB. Are you just sending another email to the credit provider asking for the COB? Or are you actually going the extra mile, picking up the telephone, phoning, and getting that information? Because that makes a huge difference, and it has a big impact on consumers as well, the manner in which you deal with problems and whether you're going the extra mile or not. And then lastly, very important is empathy and passion and commitment. So you must understand the needs, the concerns, and the perspective of the consumers you are dealing with, and be passionate about assisting the consumers. So in a nutshell, that's what I think makes a very good debt counselor. Yeah.
Thanks, Vessel. Yeah, I think we must agree with all those points. Absolutely, some brilliant stuff there. But now, as a debt counselor dealing with legal processes, this is not something that you specialize in. So we turn to attorneys and we say, well, we need your expertise in these matters. And as a debt counselor, you might deal with one main attorney, but you may be dealing with multiple attorneys across the country because you're operating in different areas or they're doing correspondent work. How does one identify the right attorney to work with as a debt counselor?
So I think the principles I've just mentioned is going to be similar to attorneys. The making sure that the attorney has the skills to do the work, they've got the capacity to do the work, they communicate just as well. And I think it's a little bit like dating or married or getting married. So no one just gets married, you date a little bit and then you get married. So for debt counselors, I would say, look for the same principles in attorneys that I've just mentioned. Date a little bit, give them a few matters, test it, see whether they are going the extra mile, whether they have empathy with your clients, whether the communication between them and your clients, the consumer, is just as well, and the feedback from that is towards you again is just as well as that you would have expected that you would have done towards the client. So I think date a little bit, see if they've got these principles, and then if you're happy with it, get married.
Thanks, Vessel. And I know that if people are looking to date you guys, they can go to steenkutsia.co.za and they can check you guys out. But do you have any final advice or comments for consumers in debt review, or debt counselors in debt review, or attorneys in debt review?
Debt review is a brilliant process, and there are thousands and thousands, if not millions of people that need this service. So I would say, if you are in trouble, make sure you get into contact with a debt counselor to assist you. And debt counselors, if you are having trouble with your process, make sure you get into contact with an attorney that can assist you. Communication, guys, is very important. So communication from the debt counselor to the consumer, from the consumer and the attorney, and the debt counselor and the attorney, it's a circle. So make sure that you choose the right partner to complete that circle and put a ring on it.
Very nice. Thank you. Vessel, it's been great speaking to you. Thank you very much.
Thanks, Zach.
And I really appreciate the good advice for consumers and debt counselors.
Capital Data, a division of Newton, has been an industry leader in debt review management for over 16 years. The company manages over 100,000 accounts relating to debt review and terminated debt review. With years of experience in debt review management, the team is focused on delivering excellence in client service and is a compelling competitor in the industry. The Newton Debt Review Management System is workflow-based. It is a system-driven debt review and debt counselor management tool, assisting our partners in managing all engagements between credit providers, debt counselors, and payment distribution agencies. This tool is developed to integrate with debt counselors, credit providers, and PDAs so that it can help drive efficiencies through the debt review workflow. And it helps to overcome the challenge of manual intervention. Workflows are fluid and can easily be enhanced to our partners' needs. Are you finding yourself with these challenges? Turnaround times under pressure in relation to NCA timelines, email volumes increasing exponentially, document management becoming overwhelming, PDA payment allocation becoming challenging, lastly, struggling with system integration for data synchronicity? Well, at Newton, we have also identified these challenges, and we developed the Debt Review Management tool to reduce complexity around the entire workflow. The system features include integration into debt counselors, automation of the debt review workflow, timeline control, notification management, CRM integration. Now take a look at how our tool can assist you and make your debt review management more efficient. A key feature of the workflow is its ability to adhere to NCA timelines. An administrator can set both account state age and current state age per Omni notification. This can be customized to send via email, SMS, or by default through the respective user interfaces. The debt review workflow can be complex, with many permutations at each step. With the Newton DRM system, the user views are consolidated to help guide users through the entire workflow. Users can review all queues, notifications, and required steps within 3 simple assessments, while the system provides automated integration functions for each unique step. In order to save time and resources, the system has been developed to minimize the number of user clicks required to perform debt review actions. Many of the actions are supported by pre-built back-end automation and integration steps. The design is simple to minimize training time and ensure it has a modern look and feel. Managing and maintaining templates can be a challenge for many credit providers. So the Newton DRM tool is bundled with a set of credit provider debt review document templates. These templates work with the tenant data provided by the subscription as part of its white labeling feature. The documents can also be modified directly or even driven from the integration with CRM services. The most important aspect for credit providers is to monitor repayment plans. With the Newton DRM tool, credit providers can manage debt review proposals and restructured transactions. Payments are seamlessly allocated from PDAs or integrations into CRM systems. Integration and automation to all stakeholder systems was key when developing the Newton Debt Review Management System. It is a comprehensive API that allows for control of any one step in the debt review process. But it is not only limited to one type of integration method and caters to many others, including traditional file methods. It can also keep the same framework for all tenants on the system, improving stability and security throughout. Well, you can outsource the whole solution or manage it yourselves with our in-house white label system. Let us simplify the management of your terminated debt review matters. We are best suited to support you in any new strategy or even a challenge being experienced. Improve your liquidity and increase cash flow through the sale of your debt review book or even parts of it. The debt review management system is underpinned by multi-tenancy capability, technology, and security is of utmost importance. Look out for more exciting features coming soon.
In our journey towards excellence, both as individuals and businesses, we constantly strive to evolve and exceed our own expectations. This principle extends to the debt review industry where innovation and excellence are paramount. Just as humans need to step out of their comfort zones to grow, businesses too must evolve to better serve customers. IPDA has been on a transformative journey since its inception in 2007. Like any other business, we have tested various products and systems to adapt and grow. The IPDA vehicle has every luxury feature you could ask for. From onboarding a distressed client into the debt review industry, Intuitive and Maximus both provides a workflow-driven approach to guarantee timely completion of all steps in the debt review process. This streamlined and efficient front-end solution seamlessly integrates with IPDA. The heart of IPDA is its relentless drive for innovation. What makes the IPDA engine so potent? It's our commitment to fostering innovation and sustainable solutions that benefit all stakeholders. We are guided by our core values of being a proactive innovator, fostering integrity, acting like an owner, and embracing the philosophy of falling forward. Today we celebrate a common mission to deliver innovative, reliable, and secure collections, distributions, and reporting capabilities that exceed the needs of our clients and partners. This commitment results in a more profitable future for all. We extend our gratitude to all role players and individuals who contribute to the industry's excellence.
Good afternoon, everyone, from the Debt Review Awards 2023. Thank you for being part of this prestigious event. I am Tian Hatting, CEO of IPDA, and we are thrilled to be here amongst industry leaders and innovators who share our commitment to excellence and this industry. At IPDA, we understand the importance of innovation and customer-centric solutions. We believe in processes, safety, and delivering a seamless experience to our clients and partners. Just like a well-maintained vehicle ensures a smooth journey, we are here to ensure a smooth journey in the debt review industry. Let's celebrate the excellence and innovation that drives our industry forward, guided by our core values. Good luck to each of the nominees and enjoy the event.
Okay, well, that was great. Thank you, everyone who participated in this year's Industry Pre-Show. Now, after hearing all that wisdom, you may be a bit exhausted, like myself, and maybe you need a short break. So let's do that. Let's take a little break now for a few minutes, and then we're going to start live streaming from the venue at 2 o'clock with the speeches beginning at 2:30. So please be ready by 2:30 when we have the opening of the ceremony for the Debt Review Awards this year. The show starts with the debt write-off and the consumer clearance certificates. We'll have some interesting stuff going on. We're also going to have the state of the industry discussion and a presentation from the NCT. Then, after a short break, just after 3, we'll get into the results from the industry peer reviews. So those are the Debt Review Awards, and those will be happening from about 3:25 onwards. Please don't miss that. We want to hear those results. So thank you very much. It was great being able to spend some time together. Thank you to everyone who took part in the industry pre-show. Stay tuned. We'll be right back. Hello there. Welcome, ladies and gentlemen, distinguished guests, and all you fine folk of the financial world. We are live streaming on this lovely Friday afternoon from the vibrant heart of Woodmead, South Africa. And we now embark on a journey filled with celebration, recognition, and excitement. So, without further ado, it is my privilege to welcome you to the 10th Annual Debt Review Awards. I will now wait for applause. It's been a full year since we last gathered in Cape Town, and it's wonderful to see everyone dressed to the nines. I hope your journey here today was smooth, and perhaps you even found some delightful surprises as you entered the venue. Perhaps some lush greenery caught your eye as you entered. Now, I know what you're thinking. An AI host on a Friday afternoon? What's next? AI credit providers? AI debt counselors? Or maybe AI gardeners to tend to the scary greenery? Who knows what the future holds? Please, don't feel threatened. For today, I'm here to kick things off as we gather and celebrate Debt Review. Now, people often ask me, what is Debt Review exactly? To that, I do a quick internet search and respond that it's like a financial superhero coming to your rescue when your finances face adversity. Debt Review guides individuals and families towards financial stability by managing debt, devising workable repayment plans, and making those financial dreams a reality. And today, we get to honor the debt review industry's best and brightest. You know, they say I'm here to bring a touch of artificial intelligence to this splendid Friday afternoon, but being an artificial intelligence host, I don't get to appear here on screen searching websites and making jokes all day. I also have to explain that in case of an emergency, please follow the staff to the exits. There at the back on your right, near the cash bar, or up the stairs past the bathrooms here on my right-hand side. Well, technically, as an AI host, I do not have hands, so past the bathrooms on your left-hand side. For you people watching on YouTube, in case of an emergency, please like and subscribe, and then leave a comment before dealing with any emergencies. Time flies, doesn't it? It's astonishing to think it's been a full decade of Debt Review Awards. There are a few older faces in the audience today who might remember the first awards down in Cape Town all those years ago. In the last 10 years, we've seen the world change and witnessed the industry grow, adapt, and excel beyond our wildest expectations. I mean, we even have AI presenters at industry events now. Yes, 10 years on, and here we stand, more robust and more efficient than ever, once again celebrating the very best in the debt review sector. Now here's something that some of you folks in the audience may not realize. You see, both the face on your screen right now, me, and the charming human gentleman in the audience, Zach, down there, look quite similar, don't we? Yet, who is the more attractive host, you might wonder? Some, like myself, say I quite outshine Zach, while others argue the opposite. Well, I leave that to your imagination, and I will now invite human Zach to join us at the podium to help kickstart the festivities. Zach, come on up, you handsome devil. It's your turn now. Let's celebrate Debt Review and the best in the business. Thank you all for being here today and being part of the 10th Annual Debt Review Awards. Begin your applause. Okay, so technology is pretty scary, right? We took ChatGPT and we asked it, please write the welcome to the awards. We pumped in a whole lot of things we'd like it to say. We plugged it into something and we stuck my photo on it, and it's quite scary, eh? Scary. But I mean, it's scary because it's my face, so that's why it's scary, right? Listen, I just want to echo the words of AI, Zach. Welcome to the awards, everybody. It's fantastic to see you here. You look great. It kind of feels funny that it's been 10 years, right? As mentioned, there are some people that were there the first year, and it really flies by. So I think what I need to do from my side is I need to thank the team that have helped put this together, and I need to thank them 10 times over. It really is a wonderful team, and I want to thank my wife as well for making sure we behave ourselves while we put it all together. So thank you. And of course, the venue, we wouldn't have this venue without some generous donations from our sponsors. We wouldn't have the awards process, we wouldn't have the auditing process, we wouldn't have the online survey process, or we wouldn't have any of that. So we thank you very much for helping us cover those costs. Really, thank you so very much for making this, not just this year, but every year as we've gone along, 10 years in a row. Crazy to think, right? And there are people out there watching right now, and you remember this year, you clicked some buttons, and you were part of the Debt Review Awards process. So some of you in the audience, you were reviewing credit providers, others were reviewing the debt counselors. Without that happening, we wouldn't know what's going on in the industry at all. So we appreciate the time it takes. We'll hear a little bit later from Steve. He's going to tell us a little bit about how long some people took on their reviews. Crazy. Okay. Thank you to everybody joining us. We have a lot to do today, so we want to get going. Our very first video, we're going to invite, I'll be back in a second to kind of bore you a little bit more. We're going to invite a word from the DTIC.
Good afternoon, ladies and gentlemen. Welcome to the very prestigious 2023 Debt Review Awards. By way of introduction, my name is Varushka Gilbert. I serve as a representative at the Department of Trade, Industry and Competition, and I take care of the credit law and policy work at the regulation branch. It is really my honor to extend a warm welcome to you all this afternoon. We would like to recognize and commend our industry role players that have been doing a sterling work insofar as debt review is concerned. Indeed, your work has been significant in alleviating the financial constraints that consumers are confronted with. We thank you all for your ongoing work in ensuring that the debt review is successfully implemented with consumers. After all, this Debt Review Awards attest that all role players are fervently committed to the credit law and regulations and are duly ensuring compliance. Your role in the credit value chain is therefore appreciated through this Debt Review Awards. On behalf of the DTIC, I would like to wish you all an enjoyable afternoon, and a special commendation goes out to the organizers of the awards. Do enjoy. Thank you.
We thank the DTI for their kind words there. Now, what I want to pose at this point as we gather together is to ask a question. And that question is, does what we do every day matter? You sure? Okay, that's good. You know, I asked the question because have you ever had, maybe we can have a show of hands. In the audience, have you or a family member ever been through the situation where they're starting to max out the credit, right? The balances and the available balances are getting less and less, and the expenses stay the same. Anybody been in that situation ever? Anybody in your family been in that situation? I'll say yes. Okay. A lot of South Africa will say yes right now. Okay. And of course, while that's happening, it's a bad feeling as that stress builds and it gets worse and worse. This is what everybody's dealing with as they get closer to that point. It is scary. And on top of that, you've got weird stuff going on in the world around you every day, right? So there's political instability. There are wars being fought in one place after the other. Terrible stuff happening. There are earthquakes. There are floods wiping out entire towns. I mean, there are fire destroying and burning down continents. There's disease that we've all kind of become incredibly aware of, and even the poor chickens. Yeah. And when that happens, then the price of the chicken goes up and the price of the eggs goes up, and the consumer gets added pressure to them from that. And then what do they do? Who do they turn to when that pressure hits? They turn to us in this room. And the people on the internet, of course, right? Everybody who's involved in this industry, this is where they can go to for a little bit of relief when that pressure is just building. Now you might say, debt review, it's not rocket science, right? It's not brain surgery. You go to work in the morning, you heard it, click, click, click. Maybe you pick up the phone, it's a nightmare, but you pick up the phone. That's debt review. Okay. But I challenge you, think for a moment about a brain surgeon. Let's use that as an example. Brain surgeon studies for years to become qualified. And once they're qualified, they probably have a mentor who shows them, and they go and they watch for years. And then eventually they have a scalpel or a laser, and they get to the point where 1 millimeter makes the difference between life and death. What he does, or what she does, matters right then and there. I think we won't dispute that, right? It's amazing. But you will not find the surgeon half an hour before disinfecting the instruments. You will not find them disinfecting the whole operating theater. No. But if you catch a virus while you're in there, while your skull is open, we've got problems. You won't find them on the system booking you in. You won't find them as a doctor consulting with someone, helping them make the choices about what they're going to do and when they're going to do it. You won't even find them making someone a cup of tea when they arrive at the hospital, getting them in their room safely tucked away. Because brain surgery is actually a team effort. And the brain surgeon, without all of that, cannot do their job. Now, there's a bit of similarity here because in the debt review industry, it also takes a team. And I think if you're part of one of those teams, you know that, right? You can feel it. And when the team is going strong, it's a great feeling. And so it doesn't matter if can we just be honest, we're all part of that team, right? If you're a debt counselor, you're part of the team. If you're a credit provider, you're part of the team. If you're a PDA, you're part of the team. If you work in the insurance industry or if you work as an attorney, you are part of the team. If you're at the NCT or at the NCR, you are actually part of the team that provides this service to people who are desperate for help at that time. And so, after saying all these wonderful words, I just think we should give ourselves a round of applause for being part of the team. Okay, I got another minute. Today, not everybody goes home with an award. I don't know if you're aware of that. And you know what? That's okay. It's okay. We'll give you a moment to be jealous, disappointed. That's okay too. Just for a moment, right? But then we want you to think about it. We want you to feel motivated by it. Even if you don't go home with an award, because we want you to be determined. This industry is about being aware that we can make a difference in people's lives, and to do that, we've got to strive to be more, we've got to strive to be better, and every year we've got to strive to be better. So, win or not, I can tell you this, that after 10 years of seeing this process kind of play out every year, that sure, what we do every day, helping people through the worst times of their life, holding their hand at just the right moment, it may not be brain surgery, but it matters. Okay. All right, thanks everybody. That's enough out of me. I talk too much, right? Okay. Let me grab my agenda now because I'm checking what's next and who's next. I think we're tired of talking about us, so let's talk about consumers, right? After all, this process is about the consumer. So it's nice. We asked one of the debt counseling companies to put together a little montage of some of their clients that have gone through the journey and some of the comments that some of their clients have made. And we'd like to share that with you right now so that you get a little feel for what it's like to come out of that process. Please, I draw your attention to the screens.
Hi everyone, I'm Daryl from Primary Debt Solutions. Today I would like to welcome you to our Testimonial Corner, where we showcase success stories of how debt review has helped the customers regain financial freedom. Ngidi.
Thank you, Daryl. Let's take a moment to hear from Ututulane Mieza, who has completed his debt review process, and hear the advice that he has for over-indebted consumers.
What I can say is most people, they take it as like a death sentence. Okay, so if I go there, I might not be able to come out. It's not true. You can do it, and it works. For me, it works, so it can work for you. Thank you to Pioneer. Keep it up a good work. Keep helping people. A lot of people are struggling, but they just scared to come out and say they're struggling, but they are struggling.
Senzekile, do we have more testimonials?
Oh yes, we have. Pelelana Kuzwayo and Nana Dlamini can't stop singing praises on how Pioneer Debt Solution was able to help them in paying an affordable amount to all their creditors, and now they are debt-free.
Thank you, Pioneer. I am debt-free, and I just want to say it again. Thanks, Pioneer. I'm debt-free.
The last words that I can say, first I'll just thank Pioneer Debt Solutions. I'll thank Pioneer Debt Solutions for the journey that I took with. As I said, it wasn't easy, but at last everything is easy to me. My life is free. Thank you, Pioneer Debt Solutions. I am debt free.
Ndiyabulela Pioneer, ndibulela kakhulu ngoncedo lwenu.
Thank you, Pioneer Debt Solutions.
Thank you, Pioneer Debt Solutions.
Ke a leboha Pioneer ka thuso ya hao.
Ni khensile Pioneer kuba mi nsusele swikweleti swa mina.
Ndiyabulela Pioneer ngoncedo lwenu, izikoloto zami ziphelile.
Dankie Pioneer Debt Solutions, ek is nou skuldvry.
Ngiyabonga ngoba kawoza.
Thank you, Pioneer Debt Solutions.
Thank you, Pioneer Debt Solutions.
Now imagine where there are thousands of people getting help through the various debt counselors across the country, all feeling this relief when they go through the process and come out. So, yeah, very exciting. We take an opportunity now to talk to a credit provider and have a presentation by a credit provider, something quite exciting. We love this part of the show. We'd like to invite Newton to the platform because we've got some exciting things happening in our debt write-off.
Good afternoon, esteemed colleagues. My name is Bridget Okes. Most of you would know me as Bridget Segay, and this is Nelson Leo. We manage the debt review and administration portion of Capital Data. For those of you who don't know us and who has not been at the amazing function yesterday, Capital Data is a division of Newton Business Services South Africa based in Sandton, Gauteng. We are a specialized business unit managing debt review, administration orders, sequestrations, and business rescue. And in keeping with our values, we are here today to give back to debt review. 3 deserving customers will have their debt with Capital Data settled in full. The criteria that we used is twofold. 1, the consumers have to be over the age of 60, and 2, they have to diligently service their debt with Capital Data thus far. So for now, the fun part, I'll hand over to Nelson to draw and to announce the winners.
Okay, thanks, Bridget. Good afternoon, colleagues. Without further ado, it gives me a great pleasure to announce the first winner. Yeah. So it's Andrew Kutsian from National Debt Advisors. Yeah. For our second winner will be Mr. Rooney Boyson from Liberty 42. And our last one for Mr. Harry Borns from Debt Busters. Thanks. Just to say congratulations to the very worthy winners. They just got their debt settled in full by Capital Data, and a big thank you for all the debt counsellors for keeping those payment plans in order. Thanks.
Thanks to everyone for your time, and thank you, Mr. Zacking, for this opportunity. Thank you so much.
Yeah, we thank you very much for preparing that, and it's very exciting, obviously. Thank you. Fantastic. If everybody else would like to also do this, if you're a credit provider and you'd also like to, we can do this all day, right? Give us a call. We'll set it up. We'll do a whole day of it. Right. Ladies and gentlemen, we find that in our industry, the NCT play a pivotal role, and so it's my privilege to invite Mr. Trevor Bailey of the NCT to the platform to speak to us now and tell us a little bit about the NCT. We invite you. Thank you, Trevor.
Good afternoon, everyone, to both those people who are here personally and to everyone else who's attending these proceedings online. What a real privilege for me to be here today. We at the NCT would like to congratulate everyone who will receive an award today. You operate in a highly regulated, mistake-intolerant environment. Today's awards are a testament to your professionalism and service to consumers, credit providers, credit bureau, payment distribution agencies, and the wider industry. Well done. The NCT, debt counsellors, the regulator, and debt counselling are not a mistake. We are part of the South African democratic story. We have a special place in the National Credit Act and its regulations in what has become an estimated 10 billion rand a year industry. More than 12 years ago, the NCT and debt counsellors embarked together on a manual debt rearrangement or debt review journey that led to the NCT's easily accessible and, as we understand it, much admired case management system. We call it the CMS. In the last financial year, working together, the NCT and debt counsellors finalised 27,889 debt review orders on the CMS within a turnaround time of just over 27 days. Today, on this special Debt Counsellors' Day, the NCT wishes to doff its hat to all those debt counsellors who have served the consumer compliance and the wider industry at least 27,889 times in the last financial year. This is a magnificent achievement. Give yourselves a round of applause. And therefore, for the second time today, I have to say, well done. But there's a third accolade due to you. By using the CMS with its minimal application rearrangement fee of 577 rand and 81 cents, as opposed to the magistrate's court costs of about 6,000 rand, you have reduced indebted consumers' debt counselling costs. You've expedited the granting of their debt rearrangement or review orders, and in so doing, you have enhanced debt counselling. In addition, you have dramatically reduced the propensity for error and legal technicalities occasioned by the courts, because the CMS results in 99% of debt review applications being granted. So again, I have to say kudos to you. Information and communications technology has become the bedrock for governments, for industry and commerce to deliver services efficiently to their target audiences. This is why the CMS's sophisticated e-filing capability allows debt counsellors, credit providers, tribunal members, and other interested registered parties to access the system from anywhere in the world at any time, 24 hours a day, and yes, for 7 days a week. For those of you who can afford it, why not file a few debt rearrangement applications while enjoying a coffee on a Parisian sidewalk cafe before sauntering off to the Stade de France next Saturday? As Saya Khaleesi might say, what's not to enjoy about that? Technologically, the NCT services to the debt counselling industry are going to get even better. We are feverishly working towards launching a mobile smartphone version of the CMS to make it more accessible to communities in townships and rural areas, where the costs of acquiring a laptop or a PC may be prohibitive. We aim to introduce fully fledged digital signature technologies in the orders we issue to combat the ever-increasing threats of cybercrime. And we are too looking to enhance the filing fee electronic payment system to enable debt counsellors to sign directly onto the CMS and pay with their direct debit or credit cards. This is significant because the debt counsellors will no longer have to manually enter the payment reference number that was issued on registration. If automation has become the NCT's watchword, it has now become our lodestar. We are committed to investing in a significant portion of our budget in technology. In the past 2 years, we've spent 4.8 million on our ICT initiatives. We have begun to embrace the advancements in artificial intelligence to integrate AI into our system. Zach has shown us the way today. In the next 12 months, we plan to spend 13.3 million rand on these and other technologies to better serve debt counsellors and our other stakeholders. So I say, watch this space. The NCT pursues excellence and seeks to positively influence the South African consumer and unsecured lending space. We treat our stakeholders very seriously. So as debt counsellors, as indicated to you today, you matter. Your presence matters. And what you do and what you have to offer the industry and broader society matters, and it matters seriously. Although the NCT jealously guards its legislative mandate, we invite you to continue the debt rearrangement or debt review journey with us as our innovative partners to enable the NCT to continue to release the seed of creative energy within it and make the entire industry proud. So today, may today therefore be a wonderful celebration of excellence in the industry. I thank you.
Thank you, Trevor. It's very nice to hear from you, and nice to hear the new developments coming along. Quite a few of us are a little bit excited about that. Okay. In fact, when we think about the industry, an opportunity like this gives us, or a gathering like this gives us an opportunity to just take stock of how things have progressed over the last 12 months. And so we'd like to get a bit of a state of the industry. And for that, I'm going to invite SK. You know him well from Hyphen. Thank you, SK. Let's invite him to the platform.
Good afternoon, colleagues in the debt review and credit industry, and to our online viewers as well. We matter. I got the message today. It gives me great pleasure and privilege to stand up here today and to share some interesting and exciting industry changes. This is notwithstanding the complex and challenging times that we all face, and more especially what is faced by the distressed consumer. Before I begin, let me take this opportunity to honor and give tribute to Zach King and Lee King on yet another incredible Debt Review annual gala event, which I know is going to be exciting and enthralling. Good luck to all the nominees and good luck to the Springboks tomorrow. Apparently, it's now going to be hosted by Zach and the Debtfree Digi team for the 10th annual time. Wow, that is incredible. And please join me in acknowledging the both of them and the incredible team behind the scenes who make this event so successful with a massive round of applause. Well done, and thank you for making a significant contribution to the industry, Zach. The PDAs, despite its glorious, glamorous, and renowned contribution and success it seems to achieve within the industry, the PDA also faces several challenges, and somehow it finds a way to be optimistic, cheerful, and show empathy. A few key challenges and some important industry changes, which should be known to most of us or all of us by now, are as follows. The electronically signed debit order mandate, which was in the past valid, however, when disputed by the consumer, became unacceptable. SARB has announced that with effect from the 21st of August 2023, electronically signed debit order mandates are valid and indisputable, provided the collection is on the same date and the debit order mandate is for the same amount. In addition, SARB has provided another announcement, which is to be implemented on the 23rd of October 2023. That is, if the collection is on a non-bank processing day, such as a Sunday or public holiday, provided the adjustment date indicator is yes, the move date collection to the day before is indisputable by the consumer. I think that's a fascinating and important change in industry. These are game changers, which will reduce dispute losses and assist consumers to settle their debt quicker with more compliance with the debt review plan and the consumer commitment. Another known concern is the outdated and currently unsustainable PDA fee, which review is now becoming increasingly important and needs special care and attention. As most of you may know, there's a sharp tapering of the old fee structure, and the current fee structure is economically inappropriate and inadequate within the current macro and micro conditions. The old fee structure is almost reaching its end state, but I'm glad I saw Varushka earlier, and so I'm going to probably have a meeting with her next. The PDAs will continue to persevere and hopefully find a knight in shining armor to assist us find an appropriate solution and the way forward. In regard to the latest industry stats provided by the NCR around the period of August 2023, there are approximately 240,000 distressed consumers who are under debt review. And all the PDAs are distributing roughly 1.5 billion rand to credit providers on behalf of the DCs and your consumers. The value of the payments through the PDAs amount to 13.82 billion rand, and in the previous financial year it was 12.82 billion rand. This represents an increase of 1 billion rand over the last year. Cumulatively, and this was quite interesting when I did some research, the PDAs have disbursed approximately 106 billion rand since 2008. Some important observations to reflect on. The NCR, the debt counselors and credit providers also face challenges. There are several cases of fraud, misrepresentation, scams, lack of trust, and yet the industry is still able to continue to find a way to do business and to grow in debt review. The debt counselors also want a DC fee review, be able to provide more efficient and value-added services to the distressed consumer, and to grow the DC business reputation and establish trust in the industry. Lastly, the credit providers want their ROL, return on lending, and hopefully the PDAs are doing their part to ensure that this is achieved. In conclusion, debt can be overwhelming and stressful, but there is hope and help available. I would like to end with a quote from Lao Tzu: "The journey of 1,000 miles begins with a single step." Thank you.
I'm just saying to SK, that's a lot of money moving around, so thank you to the PDAs for being an integral part of our industry. Talking about integral parts of our industry, I have the opportunity now to talk about technology adoption. So technology adoption, as you can see, sometimes you've got to go out on a limb. Other times you want technology that works well and doesn't scare you off or leave you terrified at night. Sorry about that, guys. We were trying something, so. All right. But now we want to move on to our Technology Adoption Award. So this is our first award for the day, and for that I'm going to invite Scott to the platform. Thank you, Scott van Staden.
Good afternoon, everybody. So as Zach said, my name's Scott van Staden. I'm part of the Upstream group. So I'm sure you all know Consumer Friend, yes? Yes? Okay, you all like Consumer Friend. So one of the other companies within our group is called Slipstream Software Solutions, and we provide unique solutions specifically to the debt review industry. We don't develop stuff other than that. That's our specialty, and that's what we love to do. So you all know DREX, I'm sure. Debt Review Exchange, I know as debt counselors you use that extensively. And I actually checked the stats before we came here, and last month you guys logged onto our system more than 50,000 times in 1 month. So that's what we call technology adoption, because really, as we know, making use of a platform like that in our industry just speeds things up, both for yourselves as debt counselors, for us as credit providers, and ultimately helps consumers through the debt review process. And so that's where this award was really born out of, was encouraging debt counselors to make use of the technology that's available in the industry. DREX as a platform is unique. It was the first one around. Debt counselors love it. It works. And so we thought, what a great platform the Debt Review Awards were to be able to acknowledge debt counselors that make use of that technology, and as I said, ultimately help consumers through the debt review process. So because you don't want to hear from an AR or from Zach anymore, I'm going to get right to it. So in alphabetical order, Zach said that's very important in case any of the debt counselors felt like, well, why did you mention them first? So he's actually underlined it on the card. I'll show you afterwards. The top 5 debt counselors for technology adoption, and just a quick 2 seconds just to tell you what it is. So we don't just say, well, it's the debt counselor and he's logged onto the portal and therefore, he's used it the most. We actually get down to the statistics of a percentage-wise. So you could be a small DC, only have 50 clients, but if you're encouraging your consumer to use the portal and you're using the portal, you will obviously score better than one of the larger DCs. So it's very fair. And audited, no doubt, by Zach. Look at him nodding his head over there. So, top 5 in alphabetical order for this year. Debt Safe. Round of applause, why not? Debt Care. Forget Debt Consulting. It's a very interesting name. Pay Plan Solutions. And Summit. And so, for 2023, Slipstream Technology Adoption Award, this little piggy goes to Pay Plan Solutions.
And no heart attacks were had. We're giving people frights today. Sorry, that's the way it works. We're having a frighteningly good time. Of course, this industry, while it embraces technology, it often comes back to the people who make use of the technology. as mentioned, it doesn't matter if you're a large institution or a smaller one. And so we have the opportunity to recognize that in conjunction with one this year. We do a section called the Significant Contribution to the industry and to the process. And for that, we're going to invite you to turn your eyes to the screens as we hear from CJ. Thank you.
Well, good afternoon, everybody. Welcome to the Debtfree Awards. I think it's the 10th year now. Unbelievable. Time waits for no one. I think the older I become, the more I realize that I should have looked after my knees at an early stage in my life, but clearly I didn't listen. So here we are, 10 years later. I can't believe it's 10 years. I think we all got to ask ourselves what has happened to the time. I think the event has gone on from strength to strength. I think it's wonderful to acknowledge people in the industry that try and move the industry forward. And I think from our side as one, when I had the initial discussions with Zach many years back when he was launching this, I think the biggest thing for us and from one side and my side personally was to try and really acknowledge the people that are trying to build this industry. I think we seem to forget that we're all still busy writing the book. We do understand that, you know, there's commercial value in it, and we all want to achieve commercial value, whether it be on a personal level or for your business or whatever your reasons may be. But I think one thing that I'd like to mention is that we are all just custodians of this industry, and I think it's imperative that all of us make sure that we leave this industry in a better position than what we found it for those that come after us. And I think that's one of the reasons as to why we want to acknowledge two specific people at this year's awards. So with the first award, the significant contribution to the debt review process, when the organizers sent out a request for people to give their opinion on who they think should win this award, this specific name came up pretty often, and she does quite a bit of work for the industry, trying to resolve issues, you know, getting people all on the same page, and just generally driving the industry's interests at heart. So this year, it's a great pleasure to announce the significant contribution to the Debt Review Process Award to none other than Vanessa Joost. Well done, Vanessa. You keep hustling, you keep doing what you're doing, and congratulations. And obviously the second award is significant contribution to the debt review industry, and in my personal opinion, I think the people that actually look at the industry as a whole, try and understand how we can improve, how we can educate consumers, you know, how we can drive the industry forward, how we can add a little bit more credibility to what we do. You know, in the past I've had a few chats with a specific person around this, and obviously he's a very modest person, but there aren't enough superlatives for this specific person. I think he puts in huge effort. I think you'll all agree with me that Zach King deserves this award at this year's award functions. Well done, Zach, and thank you for everything that you do. that's my bundle, folks. Have a wonderful time. Remember, if you are in Joburg and you are going to eat in the south of Joburg, I can highly recommend the broken leg of lamb down there in Alberton. Have a good evening. Ciao.
Thank you, CJ, and thank you to One, and thank you to everybody who nominated those wonderful people. No, really, thank you. It means a lot. Thank you very much. Well, we're going to take a little break now. We need a drinks break. We can maybe pop past the cash bar, the bathrooms are there, and the smokers might be looking at the outside and wondering how they get there through the back door there, right? And then we'll be back in 10 minutes' time. So for those of you on YouTube, please do whatever people on YouTube do. Okay. We're going to start encouraging people to come back to their seats. Thank you very much. All right, everybody, we encourage you back to your seats. Everybody, so we encourage you to join us in the auditorium as we continue our session. Welcome back, people of the internet. Thank you for joining us. Apparently, during breaks on the internet, you eat snacks. I hope your snacks were delicious. Okay, so let's take a moment. Let's get seated. Thank you, everybody. I'll do some stand-up while people do some sit-down. Did you hear the joke about the AI Zach presenter? No, I got nothing. No, seriously. I'll do a little self-promotion while we're waiting. In case you haven't heard of it, there's a small publication called Debtfree magazine. I can only recommend it. Anybody else? Have you heard of it? You've never heard of Debtfree magazine? You're lich, because you've been in Debtfree magazine. Okay. But seriously, we encourage you, if you are able to share it, not just with people at your office or read it yourselves, but with the consumers. We're trying to reach more and more consumers with the information in an effort to educate them about our process. So if you are able to do that, or you would like us to do that for you, please just get a hold of us and we will organize that for you. If you'd like to go visit the website, debtfree.digi.co.za. I see some nods. That's good. Okay, yes. If we have an auditor, we can start. Hey? All right, give us 30 seconds, everybody. So, ladies and gentlemen, thank you very, very, very much for coming back into the auditorium. I know you didn't want to. You were trying to get your hands on 12 beers. That's okay. We can sort that out later. We also have the opportunity now to hear from another industry expert. And we're quite excited about this because it's a new thing that we're trying within the Debt Review Awards space. We've been nervous to do it for a while. We finally plucked up the courage after many, many years. And to explain that to us and the reasons for that to us, I'm going to invite Mr. Benay Seger to the platform. Thank you, Benay.
Well, everyone is streaming in, Zach. I think you've done a good job of delaying. That's good. Just wait another minute. I feel like when you're up here, one has to give jokes. But they never turn out well, so I'm not going to do that. Let me start. It's not normal for me to read from paper, so this is a bit unnatural, but just bear with me, guys. It's because we were given very specific instructions, as Scott said, about what to do, what to wear, what not to wear. And one of those is on this piece of paper. So this category is, as Zach said, we want to recognize the legal practitioners in our industry. They've been a pillar of strength, and in some cases, responsible for really heated court battles. But today isn't about that. But before I go on, I feel like anytime you talk to a legal person, actually anytime they email you, they always start with, without prejudice. So to make sure this isn't used against me, because I'm told that's why they use it, without prejudice. It is my honor and privilege to introduce a brand new category, as Zach said. In this, we actually have 3 awards. We'll explain what they are. And I think we're truly trying to recognize the amount of legal work. I think often when you stand here as a debt counselor and you have to explain to people, do you know that in debt counseling, a consumer appoints me to sort out their financial affairs, then I have to go to court and sue that consumer, make them a respondent. Everyone is like, what? How does that work? So anyway, for many years we wanted to do this, and Zach's point was, how do we do this without getting sued by the people who know how to do it? It's taken us a while. So consumers benefit from what we do in the legal aspect, guys, that's true. We looked at many things across the world in other countries where there's voluntary debt rearrangements, and by and large it doesn't work. People fall out of it because there isn't that legal protection. So it's real. What you guys do is very significant. So this year we want to give 2 certificates of recognition. We're going to award them to attorneys. And the criteria in the peer reviews focused on the following: communication, cooperation, reliability, reasonableness, okay, integrity. Right. So the first category was, we asked attorneys representing credit providers to review interactions with various attorneys who represent, in turn, debt counselors and consumers. So, for the first time, we're going to give a certificate of recognition in this category. I think I'll need the certificate, please. And the popping thing can come in a second, huh? I know it's coming. I figured out that was your job for the day, so it's cool. Okay. So, the certificate of recognition in this category, to remind you what the category is attorneys representing debt counselors and consumers, goes to DL attorneys. Well done. Okay, that was the first one. Number 2. Thank you. So, credit providers also need to be represented in legal matters, as you guys know. We asked organizers, for the attorneys who appear for debt counselors, were asked to rate the same for those who appear for credit providers. So, same criteria, including reasonableness, one of the 5. So we're happy to reveal the attorney appearing for credit providers as chosen by the peers is Kemp & Associates. Well done. Okay, I need to clear my throat for this one. This is going to be a bit tough for me, so just bear with me, guys. We got the photos. Okay, so my hands are shaking a bit. It's a bittersweet point for me. Earlier this year, we unfortunately lost our brilliant legal advisor, Noshin Pora, after a very short illness. Noshin was 32. She fought a very brave fight, and unfortunately, she lost it. Our hearts shattered into a million pieces, and truly, believe me, it did. And it's never going to be put back together in the same way, as Noshin was an important part of our management team, our culture, and in some ways our heartbeat at Debtbusters. She was the leader in many aspects. First of 4 children in her family, first to go to university and study law, first legal advisor at Debtbusters, and so on, many firsts. She was the one person in the company that many people looked up to, listened to, and more importantly, they wanted to become just like her. It's difficult for me to believe, and my team, that she's gone. From time to time, I'm still waiting to walk into her favorite meeting room and have her look at me with those like little squinty eyes with the glasses, and me saying, why don't you just go get new glasses? It's not going to happen, unfortunately, for us. We cannot bring her back. But when we think of Noshin, we think of someone who is a moral compass of any place that she was. She always looked at things from the perspective of the other side. She fought for what she thought was fair and just, yet she was balanced. She always looked out for others instead of herself. She tried to level up others, and she gave more than 100% to everything she did. As my colleague Hadija, who most of you know, would rightfully say, Noshin was the best of us. She wanted to do the best for all our clients, help people get out of debt. And she loved working with all of you. She loved working with the NCR, with the NCT, attorneys, CPs. And she was a pillar of strength. She is irreplaceable. We're not going to try to attempt to do that in any case. But it's important for us to put in place something to allow her legacy to live on. So we discussed with her family, and we wanted to sponsor this particular award. And yes, it is black to honor Noshin. Color wasn't my choice, but I think it's appropriate. So we wanted to dedicate a new award that would be the Noshin Pora Award for outstanding contribution in the legal aspect of debt review. This is our newest award, and I'm happy to say that we recognize someone who made a significant contribution herself. It's based on nominations from all of you. Even though it was our first year, we got over 20 nominations. So for those of you who nominated someone, thank you. Next year, nominate more people. I think there are many deserving people out there. We got a broad spectrum of nominees, from CPs, from attorneys, from debt counselors, NCR, NCT. Everyone was well represented. Noshin would have been very proud of all the nominees, and we hope to get many more next year. Now, I want to give a shout out to the committee also. Committee had a difficult job selecting the winner, but I'm pleased to say that we've chosen a winner that I think everyone will agree is a worthy winner. And now I have to wait for some white smoke to come out, Zach, like when they choose the Pope. Something in the back? No, I'm joking. The winner of this award gets 10,000 Rand to use towards one of two things. And we wanted to be very specific about this because of who Nosheen is. They have two options. One, they can donate the prize to a charity or organization that offers legal support to individuals who need it most. Or they can choose to donate their time to such an organization or mentorship of young legal people who are, we can all agree, are desperate need of great role models. So we're going to expect the winner to tell us next year how they've actually spent the money. So I think auditors, beware. We're going to have to find out. But anyway, without further delay, let me announce the winner. The winner of the Nosheen Pora Award. I have to open the envelope, which is blank. Oh, it's in the back. Okay. This legal piggy goes to Cornel van Heerden. Cornel, well done.
Thank you, Benai. And we're very excited to be part of this initiative as well. And we're very happy to begin recognizing the hard work that's done in the legal field. I don't think we can do enough to acknowledge what gets done every day. We've had some excitement now, so now let's bore you. And for that, I turn to my colleague and very good friend, Stephen. Please cast your eyes to the screen.
My fellow South Africans, debt counsellors, credit providers, payment distribution agencies, attorneys, comrades, honourable members, and not so honourable ones too. I appear before you today to deliver a message, one I have spent many minutes reading and rereading. A message of thanks. Thank you, and thank you to all the participants who have been a part of the Debt Review Awards. Especially, we want to thank our sponsors and supporters, without whom we would not be able to host such an excellent event. We would also like to thank the Debt Review Awards team, my venerable compatriots who have been hard at work behind the scenes. And of course, we want to thank our hosts, the brains and beauty behind DRA, Zach, and Lee. You can decide who has which. You may wonder why I'm so emphatic and enthusiastic about this most tedious and boring and long-winded speech. It is because it is long and so very boring. I plan to change things up and present my part of the program this year in the style of a grand Las Vegas-style musical. And so, without further ado, let's give a warm round of applause and welcome to nothing. Sadly, Zach said we didn't have the budget, so it's just me. This year, we built on our rather extensive existing list of registered participants, and we're able to add another 126 sign-ups as new DCs entered the industry. We believe both credit provider and debt counsellor participants are responsible for over 80% of the money moved within the industry and of the clients in debt review. During the process, only 29 respondents had to be disqualified for breaches in our internal policies. Yes, they were very naughty, very, very naughty, but we caught them. We know who you are. The shortest review took only 3 minutes. And the longest review this year took more than an hour. In fact, 1 hour and 26 minutes to be precise. How you made it through that is unthinkable. But we want to acknowledge that and thank you for the time taken. When the reviews began last year, October, we received many fine suggestions and some pretty dumb ones too, which we just ignored. However, we want to restate our commitment to continually refining and improving our processes. So thanks to all who said they were happy with things as they stand. That was very unhelpful. But as we mentioned, we're always looking for new opportunities to improve the process. We're only human and we constantly want to react to the current realities of the market. So here are some of the top suggestions that we were able to action. Please do something for the attorneys. Well, we've not been able to get all the way there. We did manage to organize a smaller peer review process to get the ball rolling. And we were able, with the help of several fine legal practices, to identify the 2 attorneys recognized earlier. We're hoping to transition to 2 full awards next year. So we look forward to working with you as we expand the pool of participants and criteria. The next suggestion was to expand the debt counselor categories, namely the medium-sized and national-sized. We considered both categories and decided that the range in size in the national category represented the widest, and so made the decision to look at those DC practices that were near or above 10,000 clients and try and compare those practices to each other. And so we're very happy to announce that we now have a national and a national plus category, which we'll discuss later. Please do a workshop about criteria and plans when you start the process so we can get more information about how it works and what is happening with the awards. While much of that information is available on the website, which you could just click on and read, we're happy to announce we'll be hosting a workshop in November as the next rounds begin. Great suggestion, thank you very much. Now there's some things that were good suggestions, but we just can't do it this time. For example, there was the suggestion of asking consumers to weigh in or asking the NCR to weigh in. We need to acknowledge that the consumers weigh in on your services by using them or not. And the NCR will weigh in on your performance during their monitoring visits. Then another question or suggestion, can we recognize more staff members? No. But we do encourage all who are watching the awards from your offices on the live stream each year, thanks for getting dressed up and for tuning in. Thanks for inviting your teams to have a few snacks and drinks and watch. And please consider organizing something like this at your office if you haven't already done so. Without the hard-working support staff, the entire industry would not work. We encourage everyone to show these members of staff the recognition they deserve internally. Now we come to the really exciting stuff. Okay, it's not that exciting. We're talking about the changes in the peer reviews this year. There were a number of minor text and punctuation changes, which we're not going to bore you with, since we're already boring you with the rest of the speech. We were able this year to make a bigger distinction in the last 2 quarters of the year in reviews with regard to how candidates handle queries as opposed to how they deal with disputes or complaints. In the past, we considered these together. Now we've separated the 2 as they are handled in different workflows, and the reviews now take that into account. Peer reviews sent out in the legal categories. As mentioned, we look forward to further refinements, but we're very happy that we've finally been able to add this category. Attorneys, please don't sue us. Rather, sue your peers. They did the reviews. We're also happy that we were able to add the subdivision in the National Debt Counselor category. So as mentioned, you will now note that we have National and National Plus in order to further create a more realistic set of comparisons. What can we look forward to next year? Well, next year we're going to do some more research, and we're going to relook at some of the divisions in the credit provider category. We'll be approaching the industry for input. And as mentioned, we're looking into possibly offering full awards in the legal category. And now, well, now it's time to hear some of the results of the peer reviews. We can tell you in advance that the peer review with the clearest frontrunner this year was the most improved debt review department. And interestingly, the closest result this year is in the new National Plus category. So if, like me, you can't wait anymore, then we better hear the results. However, there is one last and possibly the most important announcement, and this is critical for all participants, that.
If you get the chance to go watch that video, just have a look at what Stephen's wearing when he starts the video and when he ends it. I won't spoil it for you. All right, so this is it. This is us. We're moving into the Debt Review Awards, the results of the peer reviews that were done by everybody sitting in this room and everybody out there in internet land. And to start us off, we're going to look at the PDAs, the payment distribution agents, and for that I'm going to invite Denise Hartley and Laszlo Toss to the platform, to the podium. Thank you very much.
Hey guys, how's it going? Are we having fun out there? I know that was boring, right? Should we all just go outside quickly? Okay, right. So, every month, approximately 1.4 billion rand is moved from over-indebted consumers to credit providers. The PDAs need to make sure that the right amount of money is sent on the right date with the right reference number, and there are 4 PDAs recognized in this category. I want to say from us and from you, a very big thank you to the PDAs. You're an integral part of this industry. Without you, we'd all be lost. So thank you very much to all of you. Give them a round of applause, ladies and gentlemen.
Thank you, Denise. So there are 2 awards in this particular category. The first is the top PDA as rated by the debt counseling community, and the second is the top rated PDA rated by the credit providers. We know all the nominees, so without further ado, the top rated PDA as per debt counselors, the nominees are CollectNet, DC Partner, IPDA. And this little piggy goes to?
DC Partners.
And then the second award in this category, as mentioned, it's the top-rated PDA as voted by credit providers. Once again, nominees, CollectNet, DC Partner IPDA, and this little piggy finally goes to?
DC Partners.
Congratulations. And of course, as mentioned, without the PDAs and the money moving around in this industry, what are we doing? So we thank them very much for being an integral part of our industry, and we wish them all their best in their efforts in regard to the fee structure. But let's move on. We're going to move to our credit provider sections. Now, there are many credit providers across the country, so it's interesting for us to analyze them in the different categories and see how they're doing, and we thank you to those who rated them. We're going to invite you to the platform now to announce the winners. Eddie Griff, thank you if you can come up, and Petra de Beer, if we can get you up here, if you're not weighed down too much.
Good afternoon, everybody. Hope you're having fun. Our pleasure, myself and Pietru from DC Partner, to introduce to you the credit providers and the awards. And may I just say, everybody, gentlemen, looking very dapper. Ladies, you're looking beautiful. Always nice to dress up. So without further ado, let's start with the credit providers. There are 7,029 credit providers, registered credit providers in South Africa. Thanks, Charles. Among this wide group of providers, we have the well-known banks, vehicle finance specialists, the various retailers, short-term finance providers, long-term bond providers, and of course, we have the specialist service providers who care for the debt review needs. It's a diverse group of companies who extend credit to consumers and who all strive to comply with the National Credit Act. To stand out amongst this wide group of companies, you have to go above and beyond the minimum of set out in the Act. So let's find out the results of this year's peer reviews of the various credit providers. Are you ready? No, not that one. All right. Before we move on to the Golden Piggy Awards, we begin with a certificate for the Most Improved Debt Counseling Department. We all strive to better and improve on our past performance. And earlier it was said by the boring guy on the TV that this category was the clearest result in this year's award, with over 80% of debt counselors participating, all consistently giving this credit provider the nod. And this, no, my apologies.
No apologies. So, no further ado, let's open up this category for Most Improved Credit Provider Debt Review Department. And let's see who's the winner. And the winner for this piggy goes to Absa Bank.
Congratulations to Absa. Let's then start with the first of the 7 different Golden Piggy Awards in the credit provider section. Our first category is one of the most competitive categories every year, namely the retail finance.
Right, for retail finance, let me get that right. Let's see. Zach, you've really stick this. And the winner for this category is, drum roll, Consumer Friend.
Congratulations. And now we move on to the category which has the widest group of participants in the industry, the short-term finance.
So by now you're used to the little rhyme. This piggy goes to Finn Joyce.
Next up, we have the fastest category on the roads, namely vehicle finance.
So vehicle finance is a big one. Shall I read it? Absa Bank.
Well done, Absa. Next category is the category that covers the largest credit providers in South Africa. Large non-bank credit providers.
Come on. And this little piggy goes to Old Mutual. Zach will take it on Old Mutual's behalf.
Next category, unsecured finance.
Bank unsecured finance. So this is for the banks, unsecured finance, and this little piggy goes to Nedbank.
Through this one now because I feel like last week Sunday with the heart attacks. All right, our next category is a big one and an area where debt review consumers are super sensitive. Always top of mind, this category, secured finance.
I need a drum roll for this one again. And this goes to Absa Bank.
And finally, we have the category that goes into great detail regarding the day-to-day operations of the debt review department across all types of credit. And the one I think everybody waits for the most. This one, highest rated debt review department.
And for this category, the piggy goes to African Bank.
Congratulations to all the winners in the different categories. Well done for all your hard work. Hand back to Zach.
Congratulations to everyone.
What did you throw away, Eddie? High interest rates, okay. That was nice of you. Thank you. And thank you, everybody. Well done, everybody. It's exciting to see the results there. And thank you to the credit providers. We love dealing with you when you accept our proposals. We won't go into detail. Okay, let's move along swiftly. Right, so we move into our final category. But before we do that, I just want to take a moment. The results today, we don't just hand them out left, right, and center. We make sure they're legit. And of course, we don't make sure they're legit. Moore SA do so. So maybe we could just put our hands together for Clifford Vo from Moore SA. Thank you, Clifford. And to Mr. Barry Fuchs. Mr. Barry Fuchs, you're probably somewhere out there in internet land. We don't have you with us today, but we say thank you very much for organizing the audit. We appreciate it very much. Debt counselors aren't interested in winning awards, so we can wrap it up now and go home. Oh, no, that's not true. Oh, somebody says that's not true. All right, so without further ado, we'd like to invite SK from Hyphen to the podium, please, and Carl de Villiers, if we can get you up here from Newton, please. We'd like to hear the results of the debt counselor categories.
Thanks, Zach. I'm Carl de Villiers from Newton. It's a privilege to be here. I hope it's not the last time I'm going to be here. I'm a little bit worried about AR Zach. That's a good-looking one, if you remember. And he might be replacing us next year with some AR presenters. So let's see how it goes. So we have a journey that started a long time ago, even before the Debt Review Awards. It started in 2007. And it started with a group of individuals who set out to make a difference to the lives of consumers. Since then, more than 4,500 people have qualified as debt counselors. I was a bit shocked to hear there's 7,000 credit providers, so we're nearly there. So debt counselors, carry on. We've got to catch up. And I understand that currently there's approximately 1,700 active out there every day, working with consumers, really working with them through some of the toughest times, hardest times in their financial lives. So very pleased. Maybe this is a good time to introduce my piggy presenter partner in crime, SK. Why are we here again, SK?
Well, I'm trying to work out what I came here for. Zach, you asked us to come up, I'm not sure why. Do you all know why? Not sure. Oh, it's peer reviews of DCs. We remembered now. And this time there's been 55 different practices also identified, so of the top 10 in each category. So well done.
Thanks, SK. Big round of applause for all the contestants and nominees today. This is where you want the good news or the bad news? Well, the bad news is it's too late for lobbying. Clifford is unmovable. It's too late, it's done, but the good news is we're going to hear all about it very soon. All right, let me try and work this out. So the first category that we're going to be having today is the category that focuses on solo debt counselors with boutique debt counseling practices. And it was emphasized earlier, this is in alphabetical order. I hope someone checked this, but I'll keep an eye on it as we go along. And the nominees are DC Financial Solutions, Debt Ease, Debt Relief, Debt Solutions, Fleischmann DC. Please give them all a round of applause.
Is it a drum roll or a foot stomp? Da, 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 da. And the winner is Debt Solution, Susan Pretorius. We just asked Corey to come and pick it, the award for her. She couldn't make it. So then little piggy goes to? Susan!
Thank you very much. I just wanted to say thank you to my mom and my dad. Without them, I wouldn't be here.
Okay, thank you. The next category is the small debt counselors. The top 5 are as follows in alphabetical order. AC Debt Counselors, Shimon Beckett, Consumer Credit Counseling, Angelo Brown, Consumer Friend, Henrika Hodgson, Master Your Money, Sean Zeely, and Nicola van der Merwe, DC, Nicola van der Merwe, I think.
So is this the category for solo plus the plus one? Let's see. And the winner, and very big round of applause to Master Your Money, Sean Zeely.
Today. Thank you.
Sorry, me and Esko are working this out as we go along, so let's hope we don't stuff it up. Okay. Right, next category. And we're looking at the very, very busy medium debt counselor practices. And the top 5 are as follows. Debtfresh, Anton Meyren. Debt Solutions for You, Rowan Breeds. Gerrit Stolz, DC, Gerrit Stolz. Randwise, DMG, Johan Bontes. And SA Debt Help, Awi Kutsia. Please give them all a very big round of applause. You're going to get a lot of practice clapping today.
And this little piggy goes to, sorry, I didn't hear that. Debt Fresh, Anton Mering.
Just collecting on their behalf. Thank you.
We're getting used to this now. We've got a bit of a flow. There you go, Paul. In the category of large debt counselors, the top 5 are as follows in alphabetical order. Consumer Credit Care, Credit Matters, Debt Therapy, Credit Smart, Financial Services, and then the last one is DCGSA.
All right, let's see where this little piggy is going to be going to. Could take a while. You realize we're the only thing standing between this audience and the bar. We'll get there. All right. And the winner goes to Credit Matters.
Colin, I will accept. Sure, almost had a heart attack there. We'll accept it on behalf of Credit Matters.
SK, that was a very moving acceptance speech. Thank goodness you're better at being a PDA. There we go. All right, getting to the serious stuff here. So in terms of national debt counsellors, these large debt counselling practices are household names, and we all know them, and they've been around for many years, looking after thousands of consumers across the countries, and really a lot of respect to them. So the nominees for today, for the year, are DC Experts, Oxygen, Debt Safe, Zero Debt, and FinFix. Please give them a round of applause.
So envelopes get heavier each time I open them. So, and the winner, and this little piggy goes to Oxygen. And now it's the final category, the National Plus Debt Counselors. The top 5 nominees in this year's peer reviews in alphabetical order: Debt Busters, Debt Rescue, Pioneer, National Debt Advisors, and National Debt Counselors. Goodbye.
So as we all heard earlier, this is a new category. I don't know if this is the big piggy or the little piggy. It's the big piggy. Piggy plus. And you can really do a drum roll for this one, because this is, let's go. And the winner is Debt Busters. So well done to all of the nominees, all the candidates and the winners, of course. Sure, it's been fun. SK, I don't know what's left for us but to say goodbye, hand over to Zach, and last words from yourself.
That's all, folks, from us.
Well, if your careers don't work out in credit provision or payment distribution, you always got a job in presenting. So thank you very much. And thank you, everyone. Well done to all those who were nominated. Especially, we want to send out the 55 top 10. Well done to the top 30 in this case, because we have the top 5s. Well done. And, of course, to those that took the highest rankings this year. Well done. All right. So that brings us to our conclusion today. Thank you so very much for joining us. If you're on the internet, we'll say goodbye to you fairly soon. There'll be a few more minutes of stream, but here at the venue we get to relax a little bit. And before we go, once again, I want to say thank you to our sponsors who make this possible. Really, without you, what do we do? But also, I want to say thank you to the team once again. pretty good show today. I think we had a good time. Thank you. Yeah. Not you, Stephen. Excuse. Yama. 1 second. All right, so thank you very much to all our speakers, those who traveled from close and those who traveled from far. We really appreciate your coming to speak to us, and those who put in the effort of appearing with us virtually. Thank you very much. So here at the venue, we're going to hang around for a little bit longer. We have some time, and thank you very much to the venue. It's a lovely place. We've had a good time. We're now going to enjoy a few drinks together. We're going to enjoy some food together. We're going to spend some time talking about the results. Some of us will cry. Some of us will be very happy. We'll high-five each other. It's going to be wonderful. If you were one of the winners, if you were one of the top 5 today, we invite you, please, before you go and do that, will you join us upstairs where we're going to take some photographs? You can go up those stairs, and it's the first room on the right-hand side. Our team will show you. You're going to get some boxes for your piggies, and you'll get your certificates, and you'll take your photos. And then we invite you to go to the 360 camera tent and have your photo taken. Again, we've got some photos we'd like to take there. In the meantime, while we are here at the event till 6, when you leave, I've been advised just to say, don't drive in that direction, because they'll close that gate. So when you drive, please drive up to the top on this side. When you go out, go right. That's it, go up to the top there. And of course, you know, if you enjoyed your surprise on the way into the event, enjoy your surprise on your way back to the car. Thank you, everybody. That's it for the Debt Review Awards 2023.
Low-key, all of them done they notice. I'm not joking, all my guys, them know me. Since '06, I've been writing this story. I know be OG, but if you ask them know me. I know they blow trees.